All right. Good morning, good afternoon. I don't know, maybe good evening. Depends upon what time zone you happen to be in. So sit down, tune in, turn on. We are getting started here momentarily. I'm just hey, chat in. Let us know that you number one can hear me okay. And you know what? I'm even going to attempt to turn on the camera here. There we go. Welcome. Hopefully everybody sees me, hears me all right. I'll be joining you today. I'm looking over, by the way, at another screen over here, so I apologize. I'm not looking at the camera. There's another screen, and that's actually where your chat is coming up here. So feel free to chat in where you might be joining us from today. I will be broadcasting from, it's a little bit chilly here. I'm in Payson, Arizona, which is up in the mountains. So it's normally it's like a summer home, but I don't know what I'm doing here. It's cold. We live most of the time now in St. Croix in the U.S. Virgin Islands. We're back just visiting for about 2-3 months. Should head back to the island here soon enough. Anyway, with that, fantastic. I appreciate you guys giving me a little bit of feedback. Boston, are you still digging out a little bit? Hopefully you clearly have power, but oh yeah, that is brutal. Yeah, the we haven't had that much snow here as of yet, and I don't want any. No snow. This whole winter thing, yeah, I'm done with it. I'm absolutely done with it. So we're going to start here. As I said momentarily, there's a few informal things that I always try to mention kind of up front. I think it's important. Number one, throughout the course of this today, and I'm probably walk around a little bit here, but number one, throughout the course of today's presentation, I and even encourage you to ask questions. Is that all right with everybody? So everybody's putting in temperatures of where they're from. So that's not good. 8 degrees is not good. Could be worse. You could be in Wisconsin. You could be in Canada. Anyway, with that, a few informalities. You can ask questions today. The other thing that always comes up is people continuously ask me, is this live? Yes. And I like to do this during the market session. I like to do it because it's a lot more dynamic. I'll probably try to fire off a few trades throughout the course of today's session as well. So I hope that's all right with everybody. Do not be alarmed if we're firing off some trades. By the way, I use Thinkorswim. I also use Tastyworks. Excuse me. I display absolutely everything from profit and loss to individual positions, whatever I happen to have on at any given point in time. I am absolutely unequivocally full disclosure here on every single position that I always have on. This happens to be just a number of portfolios. It looks like a lot, but it's not. This is not that sizable of a position. Moreover, this is actually most of these trades are inside of an IRA account. So again, those are those initial kind of disclosures. Everything I talk about can be done inside of an IRA. Okay. Everything I talk about can be done pretty much at most brokerage firms. Again, I use Tastyworks, I use Thinkorswim. Obviously, this is live. I implore you to ask questions throughout the course of the day. It's why I do this live, so that we can actually interact a little bit here. So again, welcome everybody. So there's a chat box and there's a Q&A. Listen, you guys can come in, you can actually go and talk to me in either one. I'm reading it kind of in real time over here. And again, it's just something I like to do. We're in broadcasting, I think, over into YouTube. So sunny Wisconsin. I hear it's lovely there this time of the year. I spent many a year in Chicago. So I feel your pain. There's nothing like February in Chicago. It's I worked at the SIBO, Chicago Board Options Exchange. You go to work in the morning, and it's dark. And you leave by about maybe 4 o'clock, and it was dark. So it was always dark. That's all I remember. Always dark. With that, let's without further ado, let's get started today. Everybody good? Okay, hear me okay, see me okay? Thumbs up. With that, let's get to it. So today we're going to be talking and discussing a little bit about Ultima trades. So Ultima trades, a high probability income generator. My name is Don Kaufman, and you are watching a Theo Trade presentation. We throw up a risk disclosure. We are not financial advisors nor a broker dealer. Although I spent the vast amount of my career, both on the market making side of the business, I spent a lot of time on the brokerage side of the business. I'll discuss kind of my background here momentarily. I know there's some people here that are brand new and have no idea what a Theo Trade or a Don Kaufman even happen to be, but that's okay. So I love the bottom here. No soliciting, no recording, no photography, and do not feed the monkeys either, I guess. This is why you're here. So one of the first things right off the bat, I want to hit a couple of bullets of what we're going to discuss today. Like one of the things, if you've been here before, we talk extensively right now about Ultima. We've been talking about Ultima literally for the last year. Why? Because quite simply, it is on right now. This is what works in volatility. That volatility has been with us now for quite some time. It doesn't look to be abating anytime soon. So what we're going to discuss is, again, right off the bat, this is why you're here. You're going to learn what Ultima trades are and why they're so ideal for the current market environment. Okay, so we can potentially generate monthly income. We're going to talk a little bit about a trading symbol. In fact, I'm going to cover that right up front over here that many traders, including myself, use on a day-to-day basis to really, kind of signify and create, if you would, Ultima trades. Number three, we're going to talk extensively about edge and where you can find edge as a retail trader. That's something I tend to reference from time to time. I actually say retail trader. You're retail, I'm retail. We're not typically market makers. We're not on the dealer side of the business. We're not institutional money managers, although we do have plenty of clientele that are actually on the institutional side of the business. Most of us are actually retail traders. One of the most critical things that you're going to understand today, I am here expressly to describe what works for the retail trader and where that retail trader can find edge. We're also going to discuss the benefits of extraordinarily high probability trades and how to mitigate, which is not take large losses against those particular positions. And of course, the last bullet over here is you're going to find out exactly what we trade, what products work and what products don't, what products are, have a degree of success and what products are an absolute recipe for disaster. A couple of housekeeping items in here. Today, stay with me right until the end of this webcast. We are going to provide to you our auto expected move indicator. This is something I use. Like if you guys have watched any of the videos that I personally do, there's probably not a video that I've done anytime in the last 3 to 4 years where I have not used the expected move indicator. I am absolutely adamant that not only that I use it, but all our clientele use it, and I suggest that you use it as well. We will provide you a copy of the expected move indicator. It's a $500 value. It's because I reference it today. I reference it constantly, and we feel like literally everybody should have this particular indicator. Stay with me right until the end of the webcast is in. It's a $500 value, and we give it to you. I will actually give you a link. At that link, you can go retrieve the expected move indicator. If you have no idea what it is, this is what it looks like. But this is a screenshot, and I'll be very frank with you. I don't really love the screenshot, so I like to show you like what the expected move indicator is. And I'll give you a quick example, like the QQQ. We'll go to the QQQ, and you say, okay, what's the expected move indicator? I'm going to come over here and I'm going to apply it. And what I want you to see, okay, the expected move indicator is the option market depicting forward risk. So each and every week, 3 lines are drawn on your screen. Doesn't sound like much, right? And those 3 lines, all right? So this is where the week effectively starts. This is the upper edge of expected move and the lower edge of expected move. What it actually denotes, it's like how the option market sees that risk moving forward, meaning like the option market, I'll just give you a quick example. The option market says the QQQ can move up $11 or down $11. It doesn't give you directional bias, but it says it can move up $11 or down $11, and there's a high probability of staying in that range. What most people do not understand about markets today, though, is the market making firms are all using this particular indicator because it's like an average of all the prices in the chain. Okay, it's where risk effectively lies, and you will see the market time and time again stops dead, literally on this line, stops dead on this line. By the way, these lines do not adjust. They are static. They are drawn on a Friday for the following Friday. Okay, that's what risk is for the following week. And again, if you kind of look back week after week after week, you will see the efficiency of expected move. Upper edge, lower edge, it's not so expected move can't be broken, but it is an incredibly efficient tool. There are dozens of use cases I could give you for the expected move. Nevertheless, stay with me again right to the end of the webcast. and we'll provide you a link to that expected move indicator. A couple of housekeeping items. Listen, I move at a pretty good clip today. I let everybody know that right up front. Hope that's okay. So, excuse me. I'm constantly adding more to this particular presentation. As I said, we've been talking about Ultima trades for literally the last year. If you're bored to death of it, fantastic. Hopefully you're actually using it right now, because bottom line, it's worked. In fact, I'm even going to show you my entire 2021 year results today. Shut the door, turn off Skype chat, whatever else is distracting you. Listen, you took the time to be here, focus on being here. Definitely kick out the kids, the dog could stay. But seriously, if you're going to take the time to be here, focus on being here, because I'm going to go through quite a bit. In fact, we're going to jump into that here momentarily. So here's a little bit about me. I know that some people are brand new and have no idea what a Theo trade or a Don Kaufman happens to be. One of the first things I mentioned right off the bat, you're welcome to email us at any point in time. By the way, we use a common inbox, and we use this ultimately because we get anywhere from 400 to 600 emails a day. So support at theotrade.com, put my name in the heading, and it'll go directly to me. Right. I encourage people to actually email specific questions. So it's I answer emails. I just want you guys to know right off the bat, you can always reach out to me directly. So here's a little bit about me. People constantly ask me like how I got involved in this business. I grew up around it. And in very large part, what brought me here to this point, kind of in trading and so forth, and even doing some of these webcasts, is I watched order flow for 15 years, which gave me a very unique skill set, and I'll explain exactly what that is. So as I said, I kind of grew up around traders. I had family that were market makers all the way back to the 1970s. My uncle actually started a market making firm. It was called O'Connor and Associates. If anybody's from the Midwest, specifically the Chicago area, you've probably heard of the firm. They sold O'Connor and Associates in the 1990s to the Swiss bank. It was a multi-billion-dollar deal back at that time. He had built one seat on the floor of the Chicago Board Options Exchange in 1976 to over 500 seats on exchanges worldwide by 1982. So it was a fairly phenomenal size firm and market making firm, and I grew up around it. So I got involved in the business in the late 90s. I got involved in the business. A short time after that, I actually went and started working for a no-name firm. That no-name firm happened to be none other than Thinkorswim. So I actually built the education division of Thinkorswim, along with a lot of the Thinkorswim trading application. I sat on the executive team when we took the company public in 2007. I went on to the acquisition of TD Ameritrade in 2009 when we were officially absorbed by TD Ameritrade. I then went on to actually run education for TD Ameritrade, and there at the time, 7 million clients. So throughout the entire 15-year span of that career, and people always ask, like, why did you leave? I signed a 5-year lockup clause. So from roughly 2010 to 2015, they had me actually locked up. After my 5-year clause was over, I exited, sat back for about a year, and we launched Theo Trade in 2016. So that's a little background on me. During the entire 15-year stint at both Thinkorswim and, of course, TD Ameritrade, I got to see order flow. And if you have no idea what order flow is, I got to see everything that you're doing. I mean, I can tell you down to a T. We studied everything that you've done, everything. If you say, hey, I'm an individual that sold iron condors, I could actually tell you the success rate. Hey, I sold covered calls. I traded futures. I traded currency. We knew the attrition rate of every product, meaning like we knew where people like made money, where people lost money. And more appropriately, what you're going to learn today literally comes from watching billions and others' mistakes, the knowledge of what works best for specifically retail traders. So I implore you to pay very careful attention, because even if you're experienced in this business, you're going to pick up a lot. Again, the criteria that we use today, the criteria that we discuss here expressly at Theo Trade, like the specifics, they're all based on studying retail order flow, which is billions and billions of trades. All right, with that, I still do a couple of media appearances. This is actually TD Ameritrade TV, a couple of CNBC appearances every now and again. This is myself pitted against Kevin O'Leary from, of course, Shark Tank. Let's get down to business. What are ultimate trades? So what are ultimate trades? One of the first things that I just want to make mention of, when people look at this for the first time, they think it says ultimate. That's not, that's not what it is. Ultima. Ultima is actually something that's designated expressly for trading. What Ultima basically is, it's the volatility, the volatility, the volatility. How are we making money right now? Ultima. What does that mean? It's the volatility, the volatility, the volatility. So to start off, higher volatility has resulted in significantly more options premium. Bear with me here. I'm gonna drink something and see if I can clear my throat here for a second. All right, hopefully that's better. after 30 seconds. I got my caffeine though very close. So one thing I think everybody can agree on is after the onset of COVID, volatility has been considerably higher. To denote this to you, where volatility has been considerably higher, let's just pull up a 3-year of the VIX. Okay. Here's the VIX over the last 3 years. And I like to display this because right here is obviously, this is the onset of COVID. We've been in a considerably higher volatility climate for a significant period of time. But this is arguable, right? Options implied volatility of skew is also at historically high levels, and the volatility remains at record highs. So when I'm talking about the volatility, let's cut to the chase here. One thing we look at a lot is like VVIX. So this is the volatility index. What you learn by looking at the VVIX is how destabilized the marketplace happens to be after the onset of COVID. And we picked up on this right away. So this is, again, it's a symbol called VVIX, VVIX. If you look at it, it's the volatility of the VIX. And if large part, if the VIX has been destabilized, let me get rid of this chair. If the VIX has been destabilized, the S&Ps have been destabilized. And that's something that people miss because they don't look at the VVIX. What is the VVIX? It's like there's the S&P and then there's the VIX. The VIX is the S&P 500 volatility index, but then there's actually volatility that is associated with the volatility index. So we start talking a little bit about Ultima. The destabilizing nature of markets right now is very prevalent once you actually look at like VVIX. So, in large part, that's one of the primary reasons that what we're doing right now is very, very effective. This is actually going to provide us a whole lot of opportunity or edge. In addition to it, there's a tremendous amount of skew. Now, skew kind of eludes a lot of people. Like they don't really get what skew is. I don't want to make this too painful, but normally, you look at what's called a normal distribution curve, but then there's skews, right? For the most part, if you were to look at this in terms of markets, there's a distortion right now, and it's a significant one. There's distortion expressly in how well options are actually priced. So this is a symbol that I've actually charted here. It's called skew. So as I said right off the bat, I wanted to give you a couple of symbols that maybe you're familiar with, maybe you're not familiar with, but skew, it's SKEW. SKEW, you can pull it up pretty much any trading application, but if you do pull it up on a trading application, it just looks like dots. You have to put it like an area chart because it's only calculated at the end of the day. What skew represents is, again, a distortion in how options are priced, right? That distortion is incredibly, incredibly beneficial to those of us that understand how to take advantage of it. And again, I want to show you like skew. Ultimately, this is pretty much the whole history of skew. Skew was started to record in 2011. Obviously, it's been recorded for just over what? Like a 10-year period of time. And you can see, once again, at the onset of COVID, skew has actually been incredibly high. I mean, we've averaged close last year to like, the 140, 145 level, which is unheard of. So what does skew really do for us? Like, people look at this and go, that's great. What does skew do? How can we use it to our advantage? Skew provides edge in the sale of out-of-the-money options. Oh, I said the O word. We can actually display, okay, time and again. There is a very definitive and crystal clear mathematical edge in the sale of out of the money options, specifically because of skew. Yes, there's high volatility. Yes, the volatility index is higher, but skew is probably the easiest one to display. So many traders, when they get involved in this business, and I would say a lot of you just, I mean, how many people here, honestly, there's a lot of people tuned in right now, but how many of you have honestly gotten involved and only really started trading like in the last 2 years? Come on, just by show of hands over here, or just say me, 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 me. Anybody? Anybody? Okay. So it's a lot of people, right? I love it. When I ask that, there's like 3 people that go into the chat room, me. So should I take it the rest of you are a little bit more experienced? But specifically though, a lot of people started trading options. And again, I keep saying the O word. We're going to talk a bit about options today. And most people though, they did start to open up accounts and started trading heavily only within the last 2 years. Why? I mean, those first rounds of lockdowns, people were like, I got nothing to do. There's not even any sports on TV. Let's open up a brokerage account. The only interesting thing about that, and a lot of people miss this, I'm serious about this. You realize when you open up a brokerage account and you want to trade options, they only really let you do what? What do most of the brokers let you do when you first open up a brokerage account? Okay, not trying to be facetious in any way here. What they let you do, let you buy options. Most of the brokerage firms don't let you do what you want to do with your money. They just say, okay, you're level 1 approved, which means you could be a buyer of options. And what's crazy about that is the largest number of brokerage accounts in history. By the way, yeah, you could do a covered call, but so few people do that. I'll tell you why so few people do the covered call, because they have to actually buy the stock. It gets expensive. The largest number of account openings in the brokerage history was actually in April of 2020. More accounts were opened in 1 month, okay, than in the previous 2 years now combined. I mean, the numbers are stellar. And some of those statistics are still coming out because a lot of firms didn't want to even relinquish how many accounts had actually opened in such a short period of time. So it is, again, it is absolutely phenomenal how many accounts have actually opened. Most of those being premium buyers. They typically don't let you sell options. Just to show you, retail traders have just gone totally wild. This is actually yesterday's OCC report. For those of you unfamiliar, OCC is the Option Clearing Corp. And again, I just grabbed this from yesterday. It's an end-of-day report. We traded 40 million contracts yesterday. You know what's interesting about that? Yesterday was actually light. It was this huge rally yesterday. It was a light day. We've actually been averaging 44.5 million contracts in the first month of this year. And it's even pacing slightly higher than the beginning of last year. Last year was off the hook high, right? These numbers are absolutely unequivocally astronomical. 40 million option contracts. And I just said, that's light versus what we've seen. Think about that for a second. You go, well, I don't really know what to compare it to. When I was involved on the brokerage side of the business back in 2015, my last year in the brokerage side of the business, a heavy day was 20 million contracts. That was in 2015. So the volumes have literally doubled. It's just incredible. With that, we're going to talk a little bit about today, learning to sell options. So many of you have actually heard through the grapevine that selling options is a way to be able to make money. And again, I always say like, I said the O word here, the options word. Listen, as I said, we're going to talk a little bit about options. Even if you're sitting there right now and you're like, I have no intention of ever trading an option in my entire life, I am fine with that. And I implore you to understand that in the options marketplace, first of all, commissions today have become just absolutely negligible. A lot of the brokerage firms are even effectively free. When I say commissions are negligible, depending on the brokerage firm, anywhere from nothing to about 65 cents a contract. The fees are just nominal right now. It's become absolute utopia. And people turn around and go, well, it's free for stock. Yeah, it's free for stock. But unfortunately, the stock ties up a tremendous amount of capital. Nevertheless, okay, a lot of what's going on and what's driving orders and driving the entire marketplace is in fact today the option marketplace. By the way, anything that I talk about here today, somebody said I can't do it in Canada. You absolutely can. Okay. In fact, we can even provide the right brokerage firms to use to actually to do this. So as I said, many of you have heard through the grapevine that selling options is a great way to make money. Honestly, how many people have heard that? By the way, there's low commissions in Canada too, if you know what to look for. How many people have heard that? You know, so I want to separate today again, what I call the myths from the real risk, the fact from the fiction about selling options. And what's so weird is we end up going out and we learn about options. You're like, I'm a buyer, I'm a buyer, a buyer, a buyer. But you always hear that constant hum of like, no, 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 no. The way to make money in this business isn't to be a buyer of options. Those that survive, those that are, that are actually consistent are all what? They're all premium sellers. Okay. It's called premium selling, sellers of options. You continuously hear that if you're deeply involved in this business. And, people start digging into like different chat rooms and stuff, and everybody's talking about selling premium. Okay. But if you've experimented with this, with selling options, you're going to know, okay, that there's risk involved. There's definitely risk involved. And as I said, that's where I want to separate fact from fiction, myth from real risk. We're going to dig in here and show you exactly where that edge lies. Now, do not panic. And I say this because you can do this. I am fully aware that when you first come here today, that some people have absolutely just zero knowledge of options. And I want you to know that's okay for today's session, okay? On the other end of the spectrum, so we have people that are coming here today that are absolute novice, have never traded an option before. On the other end of the spectrum, there's some pretty extreme traders in here. I mean, I even recognize, like legitimately, I recognize a couple of the names in here. So you're at the extreme level, okay? I've actually tailored this presentation on both sides of the coin. If you're brand new, you want to grasp big, broad strokes of logic, concepts regarding probability and risk. If you're experienced, okay, you want to actually look at the little nuances. Why am I actually trading a particular option? How did I actually work the order? I mean, we can go through every little facet of it. So again, there's two ends of the spectrum, and I'm going to try to hit both sides of it. The other aspect that continuously comes up is people always say to me, I don't have enough money to do this. It drives me nuts. You got to forget about margin. Drop the whole margin thing. $2,000 in your account. By the way, this slide deck says $5,000. I'll tell you why it says $5,000. $5,000 has to be in an IRA when you can sell options. $2,000 is in a regular margin account and you can sell options, bar none, unequivocally. Somebody goes, my broker won't let me. Good, then find a new broker. Okay, because I'm going to tell you right now, this is what we're going to do, and this is what you need to do, especially in this marketplace that's become wildly unpredictable. Now, people are still out there like, I'm going to find me a stock that goes up. Like, think about the risk reward of that today. I'm going to find me a stock that goes up. What are you going to do? You're going to grab yourself some Peloton. You're going to go buy yourself some Zillow right now. Have you looked at those charts? Stocks are off 40, 50%, 30% a year-to-date basis. We're only a month into the year. Okay. It is downright hostile right now. You need to learn a skill set. Let's actually jump forward. Okay. There's a lot of different facets when we talk about selling premium. By the way, selling premium means selling options. Selling premium, selling options, same thing. There's a lot of different terminology here. Here's the terminology. Ready? Sell premium, credit spreads, short call spreads, short put spreads. People like, I did a bear call spread, a bear put spread. I hate those terms. Short call spreads, short put spreads, delta neutral trading, selling naked. Listen, those are all ways to sell premium. What I want you to know is selling premium can be used. You can do bullish positions, you can do bearish positions, but for the most part, we're actually going to be very market neutral today. So you're not going to hear a lot about, I want to hear about Bollinger Bands and Fibonacci's. Okay. And like, listen, you're not going to hear that here. This is into the nuances. I am a quantitative trader, right? That simply means, all right, I use degrees of mathematics, right, and specific edge to be able to build, okay, finite structure and trade, all right, around that structure. And that's exactly what you're going to see. Probability and profitability. You're trading, no matter what you do, whether you buy a stock, whether you buy an option, a futures contract, I don't care whether you're in crypto. okay? Your trading is going to be based on probability. We can create trades all day long with a 90% probability of success and still lose money. You know, I still get every single day, I get emails, okay, to our general Theo Trade inbox, and people, they ask a very common question. And I'm not picking on you for asking this, but I want you to understand something. They say, what is your success rate? 90%. Okay. And people go, wow, hot damn. 90% means absolutely nothing. If somebody comes out and they say, look at me, follow me, I'm right 90% of the time, you should run, not walk, run. It doesn't matter that you're right 90% of the time, because you could be right 90% of the time and still do what? Okay. And still lose money. What I want you to understand, and I think it's incredibly important to understand, is that when you're out there and you're really learning this business, and we start to get into some of the finite structure and so forth, you start to learn that, first of all, probability alone does not make you profitable. You know, everybody can create trades all day long that have a 90% probability. Okay. Markets, though, they're a trade-off. Higher probability, higher risk. You could be right 90% of the time, you can still lose money. So where can you find edge? And that is what people are here for, right? Good, because that's what we're about to jump into. We're going to show you something extremely important. This is the point in time, people. Focus, right? First example I'm going to do is I'm just going to give you a fictitious stock. Okay? So I'm going to give you a fictitious stock. Doesn't matter what stock it is. I don't care, right? So it's some $50 stock. And by the way, I call every single stock whenever I do an example. I don't call it stock. I call it stock. Okay? This is stock, and stock is trading at 50 bucks. We're going to go out for this very first example. We're going to keep it as simple as humanly possible. We're going to sell, ready? 60 call. We're going to sell a 60 call. And for that 60 call, I'm going to collect a $1 credit. Now, before anybody, because I know a lot of people don't even know what a 60 call is, I'm going to put this down below. I'm going to sell 60 call. For that, I'm going to collect the $1, okay, credit. Let's say that 60 call is good for 1 month. Okay. For those of you that are brand new to options, time out. If you're brand new to options, let's get you up to speed. Okay. We're going to get you up to speed here. And again, I'm just watching off the side, reading some of the comments in here. It's good. This is actually a good group. You guys are relatively fun. Okay. And for those of you that are not talking, the beatings will continue until morale improves. So let's discuss a 60 call. First of all, you have a stock, and the stock is trading at 50 bucks, which is here. 60 is way up here, right? So you got to rally 10 bucks to even hit 60. Options. For those of you that have never traded an option before, 60 call, let's not talk about selling it. Let's talk about buying it. So in options markets, you could be either a buyer or a seller. So buying, by the way, if you trade on the floor, buying, palms towards me, buy, sell, okay, palms towards you, sell. That's it's the universal language for either stay away or I'm selling you. Initially, let's talk about a 60 call as if we were the buyer. In options, buyers have rights, sellers have obligations. If you look at the 60 call and I were to buy it, I know it says sell on the screen, but if I were to buy the 60 call gives me the right to buy the stock at 60. Where's the stock presently trading? 50. Why would I want the right to buy the stock at 60 if the stock is trading at 50? I must think the stock is going to go where? Up. And up substantially so. So think about this for a second. I could buy a 60 call, okay, implying that I think that the stock is going to go higher, but the stock's at 50. Do I own the stock? No. Do I want to own the stock? No. Why do I not want to own the stock? I don't know, it ties up a lot of capital, a lot of risk. You buy a $50 stock, you could lose a lot of money. You go, I don't believe it. Really? Look at Zillow. I don't know why I keep picking on Zillow. Is it even a $50 stock anymore? Probably not. But that's besides the point. Okay. Piton took a tank. All right. Boy, every show on TV is just absolutely decimating Peloton right now. Anyway, stock is at 50 bucks. Okay. And you buy a 60 call. 60 call gives you the right to buy the stock at 60. Do you really want to buy the stock at 60? No. So why are you buying the 60 call? I'm buying the 60 call for $1 because I think if the stock goes up, I might be able to make some money. But you realize Okay, here's the stock here, and the 60 call is way up here. That stock's going to have to soar to hit 60. Buying a 60 call is a what? Okay, it's a flyer. It's a shot in the dark. It's basically a long shot. You're betting on the slow pony over there. It's rarely going to happen, but could it happen? It could. You could actually what? You could buy a 60 call and the stock could go to 70. And if the stock goes to 70, you have the right to buy the stock at 60. Everybody else in the world has to pay 70 for it. So your 60 call is going to be worth at least $10. Okay. Think about that for a second. You paid $1 for something that could be worth as much as 10. But that's not what we're here for today. That is how most people start out in this business. They start by being on the buy side of options. And the buy side of options, you know what the problem with the buy side of options is? You buy one, you make money, and you're like hooked for life. Okay. It's like going into Vegas. When you buy options, it's the same analogy as going into Vegas. You're like a 21-year-old kid, and I go into Vegas. I throw one coin into a slot machine, pull the handle, and ding, 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 ding. You're like, you're finished for the rest of your life because you just got a free ride. You think that's actually going to happen again. Well, guess what? It doesn't. All right. If you want to survive in this business, you can't be, okay, the person that goes and puts one coin into the slot machine and pulls down and hits the jackpot, because it's going to happen once and it's never going to happen again. So what do you have to do? You have to go out there and actually learn to be the house. So we're actually going to go out and we're going to sell the option. How can you sell an option? I never owned the option. You're selling it to open. You're selling yourself into an obligation. See, buyers have rights. I can go into the option market and just say, I want to buy the 60 call. Okay, I don't have to own any stock. I don't have to do anything. I just buy the 60 call because you have the right to buy the stock at 60. But in this case, I'm not going to buy the 60 call. I'm going to sell it. You go, whoa, that sounds crazy. I'm going to sell the 60 call. And for this first example, bear with me. I'm going to sell the 60 call and I'm just going to sell it naked. I'm selling the 60 call. 60 call is now obligating. Obligation. It's a big word. I'm obligated now to give somebody stock at what price? 60. Do I own the stock? I do not own stock. All I've done is gone out and sold the 60 call. And for the sale of the 60 call, I get to collect $1. That's the premium. Now I have to sit there. After selling the 60 call, I have to sit there for an entire what? For an entire month. Okay, not a month. I sit there for a moth. I sit there for a month. And for that month, I just go, I hope. What happens to the stock over the course of a month, right? So if you sell this 60 call, you're obligated to give somebody stock 60. What happens most of the time? Stock stays flat. If the stock stays flat, you keep your buck. Or stock could go down. If the stock goes down, you keep your buck. Or the stock could go up. It could go up to 55. It goes to 55, you keep your buck. Or the stock could go to $59. If it goes to $59, you're probably going to wet yourself, but you still keep your dollar. Where do you start losing money? Not even at 60. You don't start losing money till the stock gets above 61. It's pretty sweet, right? What happens though if the stock jumps from 50, jumps all the way to 70? You go, oh, that is going to hurt. Because if the stock goes from 50 to 70, you are obligated to give somebody stock at 60. You go, but Don, I don't even own the stock. Yeah. So you have to buy the stock at 70 to give somebody stock at 60. And that's how you lose $10. That's not good. By the way, in this example, you never really have to own the stock. If the stock jumped to 70, you would just lose basically $10 in the trade minus the dollar you collected. All I want you to understand, this particular point in time, you ready? All I want you to understand is the very simple concept, okay, of this trade out here is relatively high probability. Why? Because if the stock stays flat, you keep your buck. If the stock goes down, you keep your buck. Even if the stock goes up, you keep your buck. What's the most you can make? $1. You sell something for $1, you can't make more than $1. You go, why? It's like selling a car. You sell a car for, I don't know, 20,000 bucks. No one comes back a week later and says, that was one hell of a car you sold me. Here's an extra $2,000. Doesn't work that way. Sell something for $1, the most you're going to make is $1. Are we good? We good? Because now we're having fun. All right, just making sure. Okay, so how do you lose on this one? Well, stock actually soars. So you could look at this all day long in like real terms. By the way, what's so funny today? There's so few. I was ripping on like Zillow a minute ago. Okay, there's so few now, like $50 stocks. But here's the irony: Zillow is like a $50 stock. The way, look at that chart. Okay, you can't even ski down that slope. Okay, it's too dangerous. So what is Zillow down on a year-to-date basis? It's only down 20%. It was down 30-something percent. The only thing faster Okay. Then Zillow to the downside is Kathy Wood Career. All right. You got to remember that one. Okay. By the way, the stock is actually from 134 to 50. That's not good. It's not good for anybody. All right. Hopefully nobody owns that one as I'm picking on it. Okay. So could this be done on the real market? Of course it can. Why do you think I'm showing you Zillow? I didn't know I was going to pull up Zillow until I started ripping on it. Let's go to Zillow. Let's open some options up over here. Just make a quick point, a very brief point. Like here's a stock at 50 people. Like these are the 65 calls. I was giving you an example a second ago. It was a $50 stock, with a $60 call. Look at the $60 call. Sorry, the 60 strike call is trading for like $1.50, $1.60. I mean, it's insane. So if you sold that call, you could do that, and it's a little bit over a month. But let's even do it. Let's like look at this trade for exactly 1 month. Like, oh, here's the 60 call. 60 call is still trading for over a dollar, $10 out of the money. It's craziness, just craziness. That, people, is volatility. Now, do I sit here and suggest that you run out and sell calls in Zillow? Of course not. Absolutely not. Okay. What I'm trying to get into you though right now is conceptually what the sale of a call happens to in fact be, right? So the next step along the way, now that was kind of basic for some of you. That was a little bit basic. Okay. I like what somebody said. Kathy was a genius in 2020 and 2021. Okay. It's not genius. All right. If at the end of 2021, you cough it all back up in 2022, okay, you are dying on the vine. All right. Genius has run out apparently at that point, along with margin calls. All right. The next aspect that we have to come into play over here, when you sell options, every day passing sees the dwindling of options premium. Like options, okay, over time decay. Now, most of you understand this, but this is the one I'm really going to start to beat you up on, because here is where, listen to me, even the most experienced traders in here, they don't get what Ultima really is. Okay. Ultima has a lot to do with decay. We're going to take a moment and we're going to review decay. Options decay, all right, in terms of an exponential fashion. Like everybody here has seen the quintessential decay graph. It goes like this. You buy an option, it goes, oh, like that, right? And you buy an option and it's trading for $3. And then that option a couple days later is trading for 280. And then a little bit longer after that, it's no longer at 280. Now it's only at $1.90. And you're like, crap. Okay. And then eventually the option's worth 70 cents. By the way, when it gets to 70 cents, you say, screw it. And then the option's worth nothing. Has anybody lived through that yet? Okay. This is how people think when they buy options. I'm going to tell you exactly how you think when you buy an option. You buy an option for $3. After a week, nothing happens to the stock and the option goes to 280. You go, I'm okay. Look, I only lost 20 cents. And a week later, this option's good for a month, right? So you buy it for $3 and it's worth 280 and you go, I'm okay. Then a week later, it drops to like $1.90. You go, I'm starting to get hurt. I need the stock to move. You're like, move. Sit in front of the screen and it doesn't move. A week later, it's worth 70 cents. And you go from move to, screw it. And you're kicking your feet up in there. And then it goes to nothing. Have you ever lived through that? If you haven't, you have not traded. Okay. There's like if there's a trading comprehension test, that is on it. That one's on the test right there, because if you haven't experienced that, you have not traded options, because everybody thinks the same thing every single time. By the way, I want you guys to understand a little bit about me. Do you realize that I ran education not only for Thinkorswim, which when I was at Thinkorswim from 2001 until 2009, we had the largest options order flow in the entire option arena, bar none. The only person that had bigger order flow than Thinkorswim was Citadel, and Citadel is a market making firm. Period. No one even came close. Not Options Express. No one came close to the order flow. Who do you think got to sit behind the screen and watch all the order flow? Then when TD Ameritrade bought us, okay, our order flow like almost tripled overnight. So got to see the largest option order flow. And you know what I saw with all that order flow? Okay. With the order flow, I got to look at individual accounts, but I also got to see emails of people who are like, I'm dying. But every single one of them, when they bought options, okay, and after a week goes by and nothing happens to the stock and they lose 20 or 30 cents, their first instinct is not like, I'm in trouble. It's, I'm okay. I'm okay. And then exactly a week later, they go, I am not okay. I realize I'm in trouble. And then a week after that, they go from I'm okay to I'm not okay to I'm screwed. We should actually make a chart of that as decay. All right, continuing on forward over here. Now, there's a reason that I'm covering decay. Decay in options is not what it seems, okay? Let me just go ahead and say this right now. Decay in options is not what it seems. That is geared for those of you that are experienced. You are going to learn a tremendous amount of what Ultima is right here, right now. You ready? So now we have a $100 stock. On this $100 stock, I am going to go out, okay, and I am going to sell a 120 call. And the 120 call is going to trade for exactly the same thing as earlier, okay, a $1 credit, okay? And this one, let's say this one is good for a period of, let's get crazy, 3 months, okay? Now, as soon as I throw 3 months in there, you go, what? I don't want to sit here and wait 3 months. You told me that you were going to show me how to make monthly income off this thing. And they go, I got it. Calm down. I just want to make a point. I'm selling a 120 call. Now, where's the stock? The stock is trading at 100. Do I own the stock? Do I want to own the stock? So what am I doing? I'm just selling a 120 call. How far out of the money is that? That's 20%. Okay. So the stock would have to rally 20% for me to feel scathed. I'm unscathed. But this thing is, it's so far out of the money, like you're sitting in the nosebleed section. Like you can't even see how far out of the money you are. You're 20% out of the money. You're like, to collect the whole dollar? A dollar is nothing. I hate a dollar. Listen, the dollar is superfluous. It doesn't matter whether it's a dollar, whether it's $10, it's $5. Who gives a crap? The dollar is secondary. All I want you to see is from a probability point of view. Would we all agree that this is going to be extraordinarily high probability? You go, So do you actually have to sit there for full 3 months? Okay. What I'm trying to explain to you right now, that is an option. It is what we call far out of the money. See, in options, there's what we call in the money, at the money, or out of the money. This one is in the nosebleed seats. This one is so far out of the money, you can't even see it. Okay. This is like going to the Super Bowl and almost sitting outside of the stadium. And you're like, yeah, they were excellent seats. Could you see the game? They're like, absolutely not. But I heard it was really good. You're that far out of the money. It would be a wing and a prayer to get up there. But could it happen? It could. But this trades like this are going to have a 90% plus probability associated with them. Why? What can happen to this stock? This $100 stock could go down. If it goes down, what happens? You keep your dollar. If the stock stays flat, what do? You keep your dollar. If the stock goes ripping to 110, you keep your dollar. Even if the stock gets to 120, you're still going to keep your dollar, but only after it gets above 120 do you actually start taking a hit. Do you think that if you saw the stock come in your direction, you're like, uh-oh, here it comes. Here it comes. It's a 20% move. If the stock was coming your direction, you'd be like, oh, it's vicious. Stop, don't, wait, oh, please, no. And you could probably bail out of the position, but neither here nor there. Let's not worry about the risk right now, okay? What is to look at in this trade? Why would we ever do this trade? I'm going to tell you right now, we would. We would absolutely do this trade, okay? And the reason we would do this trade, and we would do this trade all day long, the far out of the money options decay at a vastly different rate, okay, than perception. This decay graph, for years, people have looked at it. This is not accurate for far out of the money options. What we're going to discuss, okay, well, I think the best place to discuss this and the only place to discuss this is in live markets. Okay. Here is the spider. Now I'm actually gonna write this right on the screen. You are looking at the spiders and you are looking at an option chain on Thinkorswim. How many people are kind of familiar with Thinkorswim? So by the way, I could use Thinkorswim or Tastyworks. We do both. Okay. The Thinkorswim platform, you know, my area in the Thinkorswim platform, analytics. Okay, when I say analytics, I help build some of the technology behind the analytics and a lot of these, what we term information layouts here. Okay, everything from probability of touching to probability in the money, out of the money. Those are the the aspects that I help build in Thinkorswim. One of the aspects I'm going to display to you right now. Okay, I'm going to go all the way out to a May option. Okay, do you hate it? I hope you hate it. I want you to hate it. Okay, I want you to hate going out to the May option right now. Why? Because I know it's 108 days out. Okay, I'm going to go ahead and I'm going to open up the May options. And you go, oh, I'm disgusted at the thought of the May options. I'm like, good, 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 good. Okay. And I'm going to come all the way up here. By the way, I legitimately want to find an option trading right at $1. just do me a favor, because in the previous two examples, I did an option right at $1. So with here, I'm actually going to look at an option right at $1. Okay. And this first example, okay, I'm just going to draw this up here. The spiders are trading almost perfectly at 450. I'm going to go out and I'm going to sell. I'm going to put this up here. I'm going to sell the 508 call. And for the 508 call, and we're selling this all the way out in what? In the May expiration. So we're going to sell the May 508 call. And for that, we're going to collect, let's just round it to exactly $1. Like, look, the market is $1, $1.02. I guarantee you I could sell it for $1 right now, and I could probably do it 1,000 times. But I'm going to say I am going to sell it, okay, for a $1. And again, this is a credit. Time out. If I sell the 508 call, if I just sell it and sell it naked, don't worry about margin. I don't want to hear about margin. Don't tell me about margin. It's a lot of margin. Okay, don't worry about it. Okay, we can negate the margin. You go, what do you mean you can negate the margin? You could do that trade with $2,000 in your account. Just have to know how to do it, where to do it. What I want to drive home to you, concept. What's the whole key over here? The key to this trade, first of all, is to collect, okay, as much of that dollar as humanly possible. The other key to the trade is to collect as much of that dollar as possible without taking extraordinary risk. The other aspect is to collect as much of that dollar as fast as humanly possible without taking extraordinary risk. You realize the market's all the way here at 450. I'm at 508. I'm in the nosebleed seats. You can't even see how far out of the money I happen to be. So in effect, I'm selling something way out of the money. Now what? You hate that I did this. You hate me for having sold it 108 days out. What I want to do, okay, is I want to show you something interesting. A lot of people miss this, but okay, if you look at the 108-day options, what's the difference with looking at a 72-day option? What do you mean? What do you mean there's a difference? It's a 72-day option versus a 108-day option. Yeah, but this is the spiders. If you don't know the spiders is the ETF for the S&P 500. Okay, it's probably the marquee of all marquee products, right? The spiders today have already traded 3 million contracts. It's on pace for a regular day, okay? But they've traded 3 million contracts. It's one of the most prolific products in the entire industry. It's one of the most liquid products. You either love it or hate it. That's fine. Okay. Why am I trading the spiders? Because, the spiders, they can't have a CEO that dies, right? They can't have a CFO taken away in handcuffs. The spiders could jump, but they can't like gap up and be taken over. Newsflash, the spiders have been taken over. Who's the takeover company? Okay, Google. So the spiders can't be bought out. It's the whole S&P 500. Limits risk. Think about that, limits risk. We're at 450. I sell a 508 call. I asked you a question. 108 and 72 days, 108 days and 72 days. What am I doing? I'm just going to look at what the 72-day option, okay, is trading for. What I want to know is, what is this 508 call going to be worth just about 1 month from now? How could I figure that out? I look at the 108-day call, which is the 508s, and then I just look at the 72-day. How many days am I fast forward? Okay, hurt me. It's 36 days. It's exactly what? 3, 4 days over a month, 5 days over a month. Okay. It's okay. Breathe. I know it's February. Okay. It's a shortened month. Let's open up the 72-day options. Okay. What I'm basically doing by looking at the 72-day options, it's in effect, it's showing me like what the 508 call would be worth, all other factors being held equal. If we held the marketplace flat, and the market's not going to be flat, but if we held the market flat, how much decay is coming out of the option in just 36 days? Well, we have an answer for you. Okay. So I went out and I sell. Okay. And I sell that 508 call for May. And exactly about a month later, I'm going to turn around and I'm going to buy the 508 call. And I'm going to buy it back. What's it trading for? Okay. Approximately, I'm even going to round it up. It's trading for approximately 40 cents debit. What am I up? I'm up 60 cents, or better known as 60%. I'm up 60% in approximately 1 month. What do? Do it again. The whole idea of Ultima is to make money on a monthly basis. You're not going to do something crazy though, and like sell short duration options, because you're going to get killed doing that. Ultima is a shift in the volatility. Okay. Ultima is a shift in the volatility skew. Ultima is a shift in the volatility of the volatility of the volatility. Ultima allows us to actually sell longer duration options and close them out after like roughly 30 days and make at minimum 50%. Okay. Are you doing that? No. Most people that learn to sell options do not understand this very simple premise. Most people that are selling options sell options with 30 days left. Okay. It is an absolute mission and futility right now to sell short duration options. They're completely missing the boat. You know, I saw a group like on Facebook, they call them zero expiration sales. You're going to be dead. You just don't know it yet. You can't compete. Why not collect 50, 60% and glide in there? Okay. Because the one key to this, I'm selling a 508 call. That thing is, again, it's in the nosebleed seats, and I'm only going to hold it for 30 days. I want impact. I want extraordinarily high probability. I want low risk. Okay. And for the love of God, I just don't have any clue what this marketplace is about to do, and neither do you. Is the Fed going to hike? Is they going to taper the balance sheet? What is quantitative tightening? Are we going into a recession? Is it inflation? Maybe it's stagflation. Okay. I've been in this business, okay, since the 90s, and nobody got a clue. All right. We have macroeconomics, professors working here at TheoTrade. They don't have a clue. I mean, again, this is a marketplace. What's the avenue take? Only avenue is to actually make money regardless of market direction, to make a high percentage return for only holding a position for a short amount of time, get back, and reduce risk. This is Ultima. This is what Ultima is about. Okay. And what you got to understand is, why am I selling options so far out in time? Okay. Because it works. This is why you're tuning into the webcast. This is what criteria happens to be. Okay. Criteria is what we do here at TheoTrade. When I say criteria, it's the mathematics behind the trade. There was a dramatic shift right after the onset of COVID. It shifted the skew. It shifted the implied volatilities. It shifted volatility to the volatility. And that stuff is all esoteric to a lot of people. But the bottom line is, if for 30 days, you can sell an option that's way out of the money, make 50 to 60% and do it repeatedly, okay? Why wouldn't you do that? Why wouldn't you do that? The answer is, of course, you would. By the way, that's not the only product you could do with it. I just displayed it in the spiders, okay? But I could show you this. You can even go 136 days out. You can go 72 days out. You could use the spiders. But somebody says, well, I'm not comfortable with the spiders. Maybe you like the NASDAQ. You know what? The NASDAQ, it's crazy. It's even got more volatility right now. But let me show you the exact same premise in the NASDAQ. Right. And I'm just showing you with calls. And I like to show this stuff because you look out here and just pick an option around $1. It doesn't matter what you think. Here's the 430 calls. The 430 calls are trading for $1. What are they going to be trading for? Okay. When there's 72 days left. Okay. And then again, we're looking at the 430 calls, 430 calls, 430 calls. Where are the 430 calls? And the answer is they're trading for 38 cents. It's exactly the same as the spiders, down to the penny, people. In the spiders, I looked at an example. Okay, that was trading for $1 and it's trading for 38 cents. This one was $1. Now it's trading for 38 cents. It's a miracle. Okay, it's not. This is the shift in pricing. Okay, this is the IWM. This is the Russell. Could we do the same thing in the IWM and the little engine that could, the Russell? And the answer is, let's go out and find an option trading for right around $1. Oh, this one's even crazier. Okay. Oh, this one doesn't fit nearly as well, but here's an option trading right around $1. It's the 235s. Okay, 235s. And then we open up the 72 days and we look again at the 235s, 235, 235, 235. Look, those things are trading for 45 cents. A little bit more volatility to that marketplace. All I want you to see is that what I am doing, okay, isn't just repeatable. It can be done on a variety of different products. It's repeatable. And, people are always concerned, like, is it going to go away? Is it going to go away? As long as volatility is here, it is here, and it looks like it's here to stay. Okay. Rising interest rate environment. It's better now than it was over the last 2 years. Like the ultimate trades, it's getting better, not worse. Okay. It hasn't diminished. It's actually gotten better for premium sellers. I stress to you though, okay, got to learn how to do this the right way. Listen, what you also have to understand about this, okay, is there what we term the 90% probability, but there's also a 10% hammer. So we're selling stuff way out of the money and you can make, okay, great returns on it. But what happens to you once in a while? Anybody? Anybody? Because I'm telling you right now, somebody was asking what probability am I considering? Right around 90%. But here's the irony. That's a 90% probability if I had actually held it to expiration. I'm not holding it to expiration. I may only hold the trade for 30 or 40 days. So really the probability embedded in there can even be 98%, right? 90% sounds great, but 10% of the time the market rips your face off. You must be aware that there is definitive risk in here, okay? When you trade high probability strategies and you're wrong, okay, you get hammered. How many of you have actually sold iron condors? So some of you will actually admit this and others of you won't. It's okay. Admitting it is the first step today. What's an iron condor? For those of you that have no idea what an iron condor is, I'm going to give you the quick version of it. You sell a call, which is out here, and then you sell a put, which is out here. So you sell a call and sell a put. And you buy a call and you buy a put. So you sell a call, sell a put, buy a put, sell a call. I'm screwing that one up. Okay. Sell a call, buy a call, further out of the money. Sell a put, buy a put, further out of the money. Okay. The risk graph looks like this for the iron condor. That's not easy to do. Okay. It's not easy to do. And when you sell this iron condor, what's selling an iron condor is you're selling these out of the money options. And a lot of people have experimented with this. Okay. I want to tell you right now, if you've ever been down the iron condor road, what we are doing today here with Ultima premium selling is vastly different than your iron condors, vastly different. Every individual retail trader that has ever sold an iron condor will understand what I'm about to tell you about iron condors. Iron condors work and then they don't. However, the life and livelihood of an iron condor trader kind of works like this. So iron condors sell way out of the money options, and then they buy other options as a hedge. And the way that iron condors work is that, okay, let's just call you, I don't know, as an individual, you, Joe, go take a class about iron condors. There's somebody that chatted in with the name Joe right as I was saying this, okay? So Joe goes out and takes a class in iron condors, and they tell him to do iron condors, okay, and to start very, very small. And you go, okay. So Joe goes out and he learns the iron condor, and the iron condor has a 90% probability of success. And Joe goes out and sells an iron condor. And the first time he does it in a product called the spiders, and hot damn, he makes money. He makes money and he goes, oh, this is awesome. It's like the first month in a while that Joe has made money on an iron condor, if Joe's made money at all. So the very next month, Joe goes out and does the trade again in the spiders. But the first month, Joe did the trade. Joe did one contract. By the second month, Joe goes, I have 100 grand in my account. So I'll do 3 contracts in the spiders. By the way, 3 contracts in the spiders is very minimal. So Joe goes out in the first month, makes money. On the second month, makes money. So now he's had 2 consecutive months that Joe has made money. On the third month, Joe steps up and he goes into the SPX. Why does he go to the SPX? Because the SPX is 10 times the size of the spider. So Joe goes from a 1 lot in the spiders to a 3 lot in the spiders to in the third month, he does a 1 lot in the SPX. A 1 lot in the SPX is the exact same thing as a 10 lot inside of the spiders. Are you with me? What Joe doesn't know is that the SPX is the mother of all products. It's the widow maker. So Joe goes into the SPX and he does a 1 lot in the SPX. And guess what? Hot damn, third month in a row, Joe makes money. Okay. Joe is now squawking his feathers. He's walking down the street a very different way, thinking he's probably going to be the next Warren Buffett. By the way, Joe steps up to the fourth month and the market's like, come on, come on, come on. Joe steps in and does a 10 lot in the SPX. A 10 lot in the SPX is the same thing as 100 contracts in the spiders. By the way, stop me if you've actually lived through this. So then Joe does on the fourth month a 10 lot in the SPX and the market goes, we got one. Huge move comes. Joe gets completely wiped out. Not only loses the profits of the previous 3 trades, but ends up losing 50% of his account. Welcome to the market, Joe. Okay. That crap does not work. That is the livelihood of the iron condor trader. If you're listening to this right now and you go, how in the beep, beep, beep could he possibly know that? What do you think I did for the previous, 15 years of my career? I looked at your account. Okay. I looked specifically at your account. Now we used to study big amounts of accounts, like 200,000 accounts at a time for the most active traders. And we'd watch this, and these people would they would make money. Train wreck, never see it coming. And again, people go, how could you know that? Because I looked at your account. Okay. I could for the last 15 years. We looked at your account. You have to understand that is no livelihood. There's no edge in selling an iron condor. You have no risk management. What's your risk management? You go, when things go bad, they go really bad. Okay. How many people have actually lived through that? Okay. Any been there, done that? Oh, somebody actually did come in there and say, been there, done that. So I appreciate that. But it's again, you have to understand that is the livelihood of what people do when they sell options. And I want you to understand that that's not what we're doing here today. I want to make, so the reason I bring this up, you go, man, most of the time when you guys go to webinars and stuff, people talk about, let's make money. Okay. And they go, yay. It's ridiculous. It's all a bunch of crap. You got to understand in this business, right? You can't just talk about profitability. Traders talk about where the flaws are. Traders talk about where losses happen, okay? The only way you could possibly understand that, either you traded it or you've lived through it. Me, I've traded it, lived through it, been there, done that, okay? Got the hat, the baseball cap to see the whole damn thing, and I got to watch your order flow for 15 years on top of it. By the way, after you learn the class in iron condors, then you take this huge loss and you go, but it was working. It was working. So then you take another class and somebody always tells you, I can fix it. I know I can fix it. Okay. I threw this slide in here because I absolutely despise when people say that you can fix trades. Okay. Listen, you want to learn something? Oh man, 15 years in the brokerage business, you become a total cynic. I'll tell you why you become a cynic. Because you're watching people's accounts and they don't even understand what they're doing at this point. They go, I'm not adding more money to a losing trade. I'm fixing it. I'm like, this is where belligerence comes into trading. 15 years and I'm a total cynic regarding fixing trades. You do not try to fix trades, because fixing trades, the very notion of fixing a trade, throws more good money after bad. You know what the one reality of fixing a trade is? You cannot fix a trade without putting more money into it. It's more money, it's more transaction costs. More money means more risk. Do you really want to take more risk on an already losing trade? Let's just get out a shovel and just dig myself an early grave. Is that 1 foot in the grave or 2 feet in the grave? You'll figure it out. Yes, some fixes work, but the very notion of fixing a trade, did you know, absolutely unequivocally throws more good money after an already losing bad position. So keep that in mind. Oh, I feel so much better after actually adding that slide about fixing trades, because I don't like it. Fixing a trade is the same exact analogy as take a car, drive it off a cliff. Take a car, drive it off a cliff. Hopefully you're not in it, and then bring that car to a body shop. Okay. I mean, some of you have probably had a car get destroyed at some point. I have. It is not fun. Okay. I've actually had a car where it was somebody minor hit me and they go, car's totaled. And I'm like, really? I'm like, just buff it out. And they go, nope, 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 the car's totaled. People though, they get these iron condors and they're completely totaled and they don't realize they go, fix it, man. Okay. You got to let it go. You got to learn how to do this the right way. You got to learn position structure. You must do this the correct way. Right? Don't drive a car off a cliff and bring it to a body shop. Don't come with a destroyed trade and then say, now what do I do? Okay. Because that just does not work. Listen, now we're actually going to teach you how to do this the correct way. And again, this is where I'm going to get fairly in depth. This is important. Okay. Because if you look at markets, the present time, and this, by the way, this is not meant to be a scare tactic. This is not meant to be anything other than outright reality. Look at markets right now. This is the IWM. The IWM is downright volatile, but let's bring up the spiders one more time. Okay. My concern in the spiders, we're about to be in a rising interest rate environment. What's the most famous saying about the Fed? I'm serious about this. What's the most famous saying about the Federal Reserve? Okay. Anybody? You guys tell me. By the way, Jerry, yeah, I knew him actually fairly well. Most famous saying about the Federal Reserve is what? It's don't fight the Fed. Everybody's got it in there. It's the most famous saying, don't fight the Fed. Okay. I would agree because I've actually been on the wrong side of the Fed before, and it's not a good idea. Don't fight the Fed. The moment we've actually discussed the raising of interest rates, this is going to be the first time that we really do it. They have no choice at this point. They're going to raise rates. Okay. They're going to have to do quantitative tightening. You go, well, they don't necessarily have, or really? Okay. Employment, forget it. They have to wash it. Fight inflation or we're all in serious trouble. The entire world's in serious trouble. Okay. Employment situation is one thing. Who cares about the jobs number that comes out this Friday? You realize how crazy this market is? If the jobs number this Friday is good, markets are going down. You go, how could you say that? Because if the jobs number is good, that means they're really going to have to start to fight inflation. They're actually foot to the metal, like right down the pedal, right down there. Okay. They're going to have to hit, hard in March, raise rates. The jobs number is bad. We could actually rally. Think about this. Okay. We're a completely opposite environment. That's 15 years of the spiders. Behold, how scary is this? The first time that we're actually going to see real definitive tapering. By the way, just so you know, this little downdraft over here, that's when the Fed tried to tighten the previous time. That was actually in October, November, and December of 2018. Okay. They barely started to tighten. Don't worry, they loosened interest rates right after that. Okay. What are they doing now? Now we're talking about tightening again. And it's, by the way, it's really going to happen at this point. And the scary thing is you can actually see the little blip on the radar screen here, which is January. You can actually see that on a 15-year chart. Okay. There's nowhere to run to, nowhere to hide. You're going to sell premium because stock picking is going to be a lesson in futility. It's real hard to pick stocks when all of them are moving, for example, down. Okay, what we intend to do here, and I'm just going to sketch this together for you. What we intend to do here, the spiders, okay, let's use the spiders in this example. The SPY is sitting at 450. Are we going to own the spiders? No. Do we want to own the spiders? No, not really. We're going to go out. Okay. In this case, we're going to sell calls. How many calls? I don't just have to sell one. I can sell a bunch. I'm just going to sell some calls. The exact same time, simultaneously, we're going to sell some puts. Okay. So what have I done? I sold some stuff out here and I sold some stuff out here. Then what's going to happen? Okay. I'll tell you exactly what's going to happen. You sold stuff that's way out here and way out here. Most of the time, okay, you're going to make money. So I make money, make money. But what's the problem with this? Sooner or later, you're going to be a ticking time bomb. Okay. What happens if you sell all these puts and we go, and the market crashes and you go, I'm done. I'm toast. I throw the towel in. Okay. The bottom line with selling options, okay, is that you have to have some risk mitigation tactic. You can't do this and survive. And I'm going to tell you, people go, no, I can do it. You cannot do this and survive, because it's only a matter of time before this market comes down faster and harder than you could ever react. You could wake up and boom, the market's on top of you and you go, oh, I'm dead. You never even got to trade. It's been such a rare occurrence. All right. But it only has to happen one time. We need to learn how to do this right. So what we're going to teach you, okay, with selling option premium is risk mitigation tactics. Okay. Enter the hedges. Okay. Enter the hedges. What are the hedges? We are going to use, all right, three different tactics to mitigate risk. And I'm actually going to write them up here really quick. We're going to use what we term an RTS, which stands for risk twist spread. Okay. RTS is a risk twist spread. Then we use a VVS, which stands for VIX vol spread. Okay. Then last but definitely not least, we use what's termed a gamma iron, which is actually, again, a type of hedging technique. There are three primary hedging techniques that we use. The first thing you have to understand, hedging is completely and utterly a sacrificial lamb trade. You will be putting on a trade that 90+% of the time is absolutely nothing. Okay. It's like taking a lamb every couple of weeks and chucking it into the volcano. Why do you do it? Don't anger the beast. Keep the beast happy. Those hedges, though, okay, those hedges are nominal in cost. Actually, the VIX volatility spread is most of the time done for no upfront cost. There's a little bit of risk in it, but there's no upfront cost. Why do we use these? Let me explain the hedges before I go back to the premium sale side of it. Okay. We all agree that volatility could be wildly unpredictable. Give you an example. Okay. You could wake up one morning, market is what we term limit down. What limit down is, it's a 7% move. If the markets are limit down, 7% move comes, what happens? The market goes down and volatility goes where? You tell me. Okay. Market goes down, volatility goes where? Up. Volatility, boom, explodes. What a VIX volatility spread is. A VIX volatility spread is a very small, very finite position. Okay. That when volatility explodes, the VIX vol spread ignites. Okay. It ignites. Okay. Boom. And it's enough coverage to hedge the downside of the market. Does it cover all of your risk? No, it doesn't have to cover all of your risk. All it has to do is be there to like soften the blow, okay, that you will inevitably take. And that's the one thing that people don't get about this business. They think they can like, don't worry, when it moves against me, I'll get out. Let me tell you, all right, you can't ever move fast enough to this marketplace, ever. You just had to look back the last 3 weeks and you'll understand that. You're like, oh, this is getting ugly. Okay, barely even moved. Now, let's talk about the premium selling. So once again, the SPY. We're going to do this, let's say in the spiders, and the spiders are trading at 450. Now, I do not own the spiders. I'm going to go out there and I'm going to sell some 508 calls. I might be selling, okay, 520 calls. Maybe I've even sold something over here, like sell, for instance, the 500 calls. Subsequently, I'm also on working the other side of the marketplace. By the way, if you're going to sell calls, you might as also well sell puts. Do not worry about margin. Everybody's looking at me right now. I want to know about margin, margin. And yes, there will definitely be Q&A over here. What about the margin? Okay, don't worry about it. I got you. So at the same time as selling calls, it would behoove you to possibly sell puts. I mean, I could do something crazy in volatility too. Be like selling, for instance, like 310 puts. P is for put. I didn't mention too many puts. I might be able to sell all the way out here, even like the 300 puts. Okay. I can sell, for instance, the 330 puts. What I want you to see is I've done 3 on this side of the market and 3 on this side of the market. I could do them different expirations. I can kind of mix it up. Okay, make a little love, get down tonight. Why am I doing that? Because I want to spread some of my risk out. I don't want all my risk at one spot, because if I put all my risk at one spot, the market's coming to it. Okay, it's going to bring the pain, and it's going to bring the pain quickly. This is an inventory management business. I want to make you into like an Amazon of option inventory. What are you going to do? You burn through inventory. Okay. You make money on it, get it off, get another one on. Make money on it, get it off, get another one on. Keep bouncing the trade back out, bouncing the trade back out. You're looking at this, you go, that looks like a lot of work. You got to spend, okay, about 5 hours learning how to do this. After that, it's not a lot of work. After that, it's just a matter of like managing a little inventory. Managing it means going in there, maybe, okay, every couple of days and saying like, hey, what can I take off profitably and what can I put on, okay, to make me more profitability? Meanwhile, okay, your risk right now is mitigated. When I say your risk is mitigated, yes, you sold out of the money calls. Yes, you sold out of the money puts. If the market crashes, I could get killed. If the market rallies, I could get killed. If not for the fact, though, that I have a VIX volatility spread on. The VIX volatility spread would sit right about here. Let me change the color over here because this, okay, right there, that's your VVS. And if the market comes flying down, volatility is likely to go what? Soaring higher. Volatility soars. This trade will expand dramatically in price. As the trade expands in price, it actually envelops like an umbrella and covers the risk. Okay, not all the risk, but it covers the risk of most of the puts you sold. If you look to the upside, okay, is lovingly covered by what we term a gamma iron condor. And what a gamma iron condor does, it's actually perfect for a quick burst to the upside. You have to pass through the gamma iron before you can actually hit any of these calls. Okay, there are a number of other hedging tactics, but I want you to understand conceptually, not like structurally. Let's not cover every single nuance in here. Listen, the bottom line, I am selling out of the money options, but I always have some risk mitigation tactic on, always. Okay, these risk mitigation tactics, well, are they going to cost me something? Very nominal sums, but without them, you can't survive. All right, you own a house. You have insurance on the house? Of course you do. Why? Because without it, you can't survive, right? Unless you own the house in cash. And okay, again, most people, which they don't, sooner or later, the storm comes. It's going to damage a portion of the house. You need to be aware of that. This is what Ultima is. Ultima is selling way out of the money premium, okay? Making a small percentage, move on. Making a small percentage, and a small percentage is like 50 to 60%, okay, for a month of time. And hopefully the marketplace never comes close to you. But once in a blue moon, that sacrificial lamb, once in a blue moon, it is going to play out. When I say that sacrificial lamb, this little VIX volatility spread once in a blue moon, it's going to pay off. It's going to pay off huge. Okay. You may have to put this trade on and never have to use it for 3 years. And in the 4th year, you're like, oh, the VIX volatility spread saved my life. That's the idea. Listen, this is why you want to sell premium. Premium can now be sold in small accounts. You have to have $2,000 in an account, not even $5,000 anymore. By the way, it's $2,000 in a margin account, and you can actually sell premium. $5,000 in an IRA. You want to see my IRA? Okay, I have sold plenty of premium. This is an IRA. And you go, oh, what is all this stuff? I got 27-day, 45-day, 45-day, 72-day, 17-day, 45-day, set, hike. What is all that? That's inventory. You go, what's inventory? It's an inventory management business. Okay, look, all right, what am I up? 71% here. I should probably close that. Okay, up 20% here, up 63% here. You're like, you're taking some losses. Yeah, there's some new positions in here. Okay, by the way, this option I want to be down on. This is actually a hedge. So if you look at this position doesn't really count, but again, no holds barred. I will show every single position regardless of account, right? And that's important here. Premium can now be sold in small accounts, be sold in IRA, produces positive theta decay, can actually be used. You can actually use the premium selling techniques to enhance existing positions. You might say, I have a 401k. I can't trade options in my 401k. No, you don't have to. You can trade options in your 401k, but you'll do it over in your IRA, tax deferred account against tax deferred account, right? As long as you know what's in your 401k, and we'll actually sell premium against the 401k in the IRA, or we could sell premium in the regular margin account against your 401k. Why not produce income off of your 401k? You go, but I can't touch my 401k. I know that. Okay. But you can still, you know what's in your 401k. You can actually produce pretty good amounts of income off of an existing portfolio. Like, why do you have to make this so difficult? You don't trade, you don't have to trade anything autonomously. Let's build on what you already have. Okay. Trades provide an incredibly high probability of success. You never need to buy or sell the stock. And you could be wrong on market direction. This is not about market direction, but you could be wrong on market direction and still produce great amounts of profitability. And I stress this, the bottom line on here is you're going to need this in your life. Again, as we said a moment ago, the biggest saying of the Fed is don't fight the Fed. Listen, selling premium can potentially bring in really consistent returns while minimizing your risk. If you want to learn how to do this, okay, and you want to learn how to do this the right way, in a moment, we are going to discuss criteria. What criteria is, that's what we do here at TheoTrade. TheoTrade, like, I'll explain every nuance, every single nuance to you about what Ultima is. I'll even show you every structure of Ultima. What makes money, though, in Ultima premium selling is the finite pieces, what we term criteria. It's like step-by-step guide that literally says, step one, look to this product. Obviously, you can see I trade spiders. Step two, what's the liquidity? Step three, what's the probability supposed to be in this trade? Step four, how do I actually go and mitigate the risk? That's what criteria is. Before I get there, here are a few live trading examples. Now, when I say a few, I'm going to show you all the trades in one particular portfolio for all of 2021. Okay. There's a lot of them. I'm on slide 33. There's probably 100 trades. I'm just going to rip through them very, very quickly. Okay. Variations of all of the following trades can be done with as little as $2,000, with as little as $2,000 in a funded brokerage account. And all of the following trades can be done inside of a retirement account. So I'm just going to show you what it looks like. And again, I just started off in 2021. When I say I'm going to show you what it looks like, I'll give you a quick example. By the way, I used Tesla in my very first example in here. And you know what? I shouldn't even call it an example. These are all live trades. The screen that you're looking at right here, this down here, that is a screenshot taken from none other than Thinkorswim. In fact, I think it's imperative to show you exactly where this comes from. If I go over to my account statement and I go to spiders, okay, you see this? This is what we call trade history. This is over the last 10 days. Let's go back, for instance, for the last 300 days. So here's everything I've done in the spiders, everything I've done in the spiders for the last 300 days. As I said, we are a no holds barred approach, okay? Not a crazy amount of trades, but 70 fills in 300 days. Almost all of this is Ultima. You see some back ratios, those are hedges, okay? But almost all of this is premium sell, premium sell, premium sell. I sell something, I buy it back, sell something, I buy it back, sell something, I buy it back. But it's kind of hard to match up the trades. So this sell to open spiders, May 325, okay? What I did is I took those screenshots and I plugged them into the slide deck, okay? What you're seeing in here, and again, I want to show you a little detail and then we're going to rip through. This is Tesla. This is the opening position, the closing position. This is the return. This is the exact strike that I sold, the exact strike that I bought back, the opening price, the closing price. It's all here to open to close. You ready? Okay. Because here we go on a trip down 2021. In Ultima premium selling, I'm typically shooting for, and I'm just throwing it out right now, it's about a 50% return. Here we go. Bonds. Okay. I elect to trade a handful of products. I don't believe that, anybody, you don't have to trade something crazy like Tesla. Why not trade the bonds? And you go, I don't even know what a bond is. That's fine. You don't have to trade the bonds. I like the bonds. Why do I like bonds? Because I think it's a nice, soft, gentle way to make money. So here's a bond short put. I sold puts, bought them back just a few days later, 57% return. Bond short put, 53% return. IWM short call, 62% return. Okay. Look, this is a few days later. IWM short call, 53% return. Tesla short call, 76% return. SPY short put, 60%. SPY short put, 50%. SPY short put, 50%. SPY short call, 57%. SPY short call, 49%. SPY short call, 50%. Are you bored yet? So far, you've seen what? You've seen Tesla, you've seen bonds, you've seen IWM, you've seen spiders, and now you're seeing QQQ. Can I speed it up a little bit? QQQ, 62%, 53%, 50%. Okay. This is another 50%, 64%, 53%, 57%, 57%. Okay. And I'm just ripping through here. Oh, 19% loss. It happens, people. 54%, 52%, 49%, 47%, 41, 51, 50, okay, 54, 51, 50, SPY short call, IWM bonds, okay, IWM, 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 more IWM, more bonds, more bonds, more bonds, bonds, IWM, 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 Mo. Oh, I changed it up a little bit. Bond short put, bond short call, Tesla short call, QQQ short call, Amazon short call, QQQ, 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 Qs, SPY. All right, all of them are what return 51%, 50%. By the way, look, we started on slide 33. We're all the way up to slide 96 over here. ES short put, timeout. At this point in the portfolio, I felt that, first of all, every trade that you're seeing here today, was actually shot out live. Okay, when I say shot out, these are trade alerts. This is what the clients here at TheoTrade get to see. So every one of these trades, we kind of shoot out to the masses. Once I made sure, after almost 6 months, I made sure that everybody was comfortable in terms of selling premium. Then we actually stepped it up to the S&P options on futures. Why did I do that? Okay, because the S&P options on futures, are exactly 5 times bigger than the spiders. So I didn't do, the trade 1 month and then trade a bigger product the next month. I waited about 5 months before I stepped up and went to the ES. So 50% return, 50% return, 50%, 51%, okay, 51%, 51%, 50%, 56%, 53%. We're just ripping through now, okay? Now, after I'm comfortable, and I know everybody knows what they're doing again, I'm actually going to start stepping up into more complex ideas, QQQ, all right? This is a Christmas tree. The Christmas tree is the beast, okay? What do I mean by the beast? The Christmas tree is a little bit more of a convoluted trade, but once you understand a bit more about premium selling, we step it up. Again, all of the following are trade alerts. 85% return. Just so you know, an 85% return. This one was put on for a $21 credit, closed for a $3 debit. An 85% return. This 1 unit of this trade, okay, 1 unit of that trade returns over $1,200. All right. Q, 57%, 53% TLT, right? ES, 55%, 19%, 57%, 54%, 50%, 52%, 49%, 58%, 63%, another Christmas tree for a 92% return. This one's for a $22 credit, which is a grand slam. 52%, 52%, 53%, boom. That pretty much is the history for all of 2021. Again, now I'm on slide 131. We actually sent out, okay, on that particular portfolio, just about 100, okay, alerts on that particular portfolio throughout the course of 2021. I mean, one thing I emphasize, this is the time to learn the skill set. This is the time to learn sell premium, because there has obviously been a major downshift, okay, and change in markets. If you're still working, do this part-time. I don't want people to think, okay, that they have to sit here all day long. Like, a lot of us now do work from home. I've continuously worked from home, but during the pandemic over here, hopefully you guys can emerge a little stronger and better financial shape. What our members are saying, some recent stuff, some older stuff in here, but MJ's done. Intraday SPY puts method doubled in value in the most recent down move. Okay, I absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. Cannot pull away for more than 15 minutes. I cannot get any work done. I like that one. I could go on, but there comes the short I'm waiting for. I really think Theo is the best educational money I've ever spent from Stefan. Okay, if you don't have a lot of time, again, I emphasize this is not like sitting in front of the screen all day long. Each of the trades, and I emphasize this as well, each of the trades that I've shown here today are actually trade alerts. Okay, when I say trade alerts, this is stuff that you get to see everything that we are doing, and you don't have to sit in front of the screen all day. Okay. Even if you wanted to, you don't even have to look at like text messages. We send out text messages. We send out push notifications. Like we have a mobile trade application where we can actually on TheoTrade mobile, we can just alert your phone or we can send you a text message. Even if you don't want to look at that, you just look at the stuff at the end of the day. Just glance at our portfolio. Our portfolio has everything that we are doing presently in it. So you get to see every nuance of the trade. The trade results we're showing are perfect for part-timers here. So you look at it once a day, and who cares if you miss a trade? So what? This is inventory management. I may have 8 or 10 different things on, and those 8 or 10 different things, oh, I missed one. Okay, it's not essential, right? It's like apples on a shelf. You put another apple in here, one goes rotten, you chuck it off, right? You just check it once a day. Selling premium though is hands off. You can even use good till canceled orders to buy the stuff back. When it hits, your 50% premium, you could buy it back. Even a fraction of the time is enough to see great results, right? Some of the characteristics of selling Ultima Premium, the attributes of this are undeniable. You never have to buy or sell the stock. Risk can be dialed down to your comfort level. You're never going to use a stop order. Please don't ever use a stop order. You can vary time frames, and that will actually minimize risk. The probability of profitability is high. I always stress this with like premium selling. Premium selling is a lot like flying a plane. Okay. What happens when you're flying a plane? Most of the time, absolutely nothing. Okay. Once in a blue moon, you get a few minutes of like sheer terror because, the market's moving huge. But premium selling is, generally speaking, it's really hands off. Okay. It's the perfect strategy to enhance a stock portfolio. I was talking about the 401k, but it's also an excellent tool for those seeking returns to build a smaller account. And new products allow, okay, for the sale of options in any account size. That's a constant stress of mine because people go, I have 2,000 bucks, I can't do this. You can do it. All right. You just have to have, the right style of account, the right brokerage firm. It's not a problem. With $2,000, you can do it. Building a portfolio of options. Now, do not let the options portion of this intimidate you. I know that there's people that are continuously resistant to the options marketplace, and that's okay, right? If you're going to come here, though, okay, be open-minded to the fact that options, they allow so many different ways to hit degrees of profitability without per se having to be right in the marketplace. That, to me, is probably the most important concept that was, explained to me early on about options is like, listen, okay, get into part of a business that isn't about stock picking. This whole entire business is like, what do you think Google's going to do tonight when the earnings come out? What do you think of this? What do you think of that? Okay, frankly speaking, I don't care. I don't care what you think about Google. I don't even care what you think about the Fed. We know something about the Fed. They're about to fight inflation. That's not good for markets. Bar none, that's it. Okay. Listen, options open up the element, okay, to profitability. The higher the volatility, the better it's going to be. Don't let the options portion of this again intimidate you. Selling premium can be done, okay, for minimal credits and minimal risk. But the sale of premium, it's like a power saw. You got to learn how to do this right because, like with a power saw, if you don't know how to use it right, you lop off a couple of fingers. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't know how to use them correctly, you could lop off a couple of fingers, right? You can sell premium and you can minimize risk. Maybe you don't know options or have limited experience again, right? You need these strategies. You need them for the foreseeable future, okay? We can show you how and when to sell premium in a matter of a few hours. I said it takes about 4 or 5 hours. But what we do here at TheoTrade is we create detailed recipes for every strategy, okay, every nuance of the trade, including Ultima Premium. And I always say this, like you wouldn't bake a cake without a recipe. Why trade without one? And that's the way I think of criteria. Criteria is a recipe. This is what you would need to know to successfully sell Ultima Premium for a living. When I say that you need to know, what do you need to know? Well, what underlying stocks or indices are going to make the best premium candidates? What's fun about this is I already showed you. Apparently, I like the spiders. IWM, the QQQ. Okay. Maybe you don't know the bonds. I don't care if you know the bonds. You don't have to love the bonds. You don't need to know the bonds. You don't have to love them. And that's okay. But the premium selling candidate, The reason I stress this, okay, you have to know, okay, about liquidity. You have to understand too much volatility, you're dead. Too little volatility, and you're dead. In fact, the next piece of criteria after you select the underlying, what volatility should I seek out? We have a volatility range, right? It has to fall. The candidate needs to fall within a given volatility range. Again, too high a volatility and you're dead. Too low a volatility, you're going to blow yourself up. What options expiration do I select? I love to show this because probably one of my favorite things in here is that look how many expirations, 1 day, 3 days, 6 day, 10 day. Okay, look how many expirations. 34 days, 36 days, 38 days, 45 days. This is crazy. Should I go out 164 days? Why not 136 days? Okay. We will actually give you precisely the right expiration for the trade. After we select the product, we tell you what the volatility should be. Then we have to do what? Expiration selection. After that, what should the delta be? You know what delta has to do with? Has to do with probability. People think of delta, the rate of change of the option for every dollar move in the stock. Who cares about that? Delta is also loosely associated with the probability. So what happens if we actually give you the probability for the trade? But then we have to tell you which options to buy against the options you sell. You can't just go out this naked. Okay. Then we actually have to give you position structure. How many options do you sell versus how many options do you buy? That's a good question. Then, do I need a large amount of capital to do this? Absolutely not. Okay. What's the right amount of risk for you? How about we can even help you dial in the risk? You can say, Don, I have a $10,000 account. I'm comfortable with X amount of risk. You need to dial that in before you ever actually hit confirm and send, because too much risk, okay, the wheels are going to come off the bus sooner or later, right? Too much risk and the wheels are going to come off the bus. You have to know who you are. Okay. You got to dial in the right amount of risk for you. What are the percentage returns supposed to be? I'll tell you that one. It's 50%. 50%. You got to just boom, 50%, boom, 50%. Okay. Did you see my portfolio? There's 100 trades in there from last year. Everything was 50%, 50%, 50%. There was a couple like, oh, I lost 19%. And then I only made 17%. It's 50%. Okay. How do I protect myself from market crashes? VIX volatility spread, risk twist spread, inflection point spread. Okay. You got to learn this, right? Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. When I say a recipe, the whole idea of how we structure the recipe, it's based on like a pre-flight checklist, exactly like a pilot would use, right? Pilot gets into an aircraft. They don't just like throw a key in the ignition, go throttle and take off. They sit there with a highly detailed checklist, like literally going through step by step by step. It always amused me sitting on an aircraft and pilots like walking around outside the plane, like pulling on the engine. And I'm like, that makes me feel good. That makes me feel good. I remember back in the day, would like turn off all your electronics. I'm like, come on, lady, if my Game Boy is going to take down this aircraft, I'm out. I'm out of here. So you got to understand, you need to have those details. You need to have that recipe for the trading, because trading is all about answering the what ifs. What might be a good stock or ETF candidate to sell premium? What's the correct option expiration? How much capital do I commit to generate a premium? What options do I sell? What options do I buy? How can I limit my risk? TheoTrade has those answers. They have your answers. We build recipes with definitive criteria. They're literally checklists for each strategy and each unique variable that you're going to encounter. TheoTrade is the answer to the question. Okay, we'll give you the probability for the trade, how many option contracts for the account size, when to close the premium sell. What if we sell off big? What if we sell off big? Okay, do you bail out of a trade? What if we rally massively? Can I fix losing positions? This business, it's about how, it's about when, it's about why, it's about what price. And I'm telling you right now, that's just the beginning of the variables. So not only does our criteria get you into the trade, but the criteria, it's not just a pre-flight checklist. Once you're in the trade, okay, and you're flying, what if the stock goes up? What if the stock goes down? What if we crash huge? We give you different variables. We're approaching expiration. There's a dividend coming. Imagine all of that is covered in like a flow chart, and it literally takes you to it. That, again, is just the beginning of the variables you're going to face while selling Ultima Premium for a living. You can read, okay, what selling Ultima Premium is. Like, seriously, you can Google everything you ever wanted about selling premium. There's going to be 10,000 pages about selling options premium. You have possibly even probably traded a few trades, okay? But that's not what we're about. We are about a recipe for success. We are about criteria, 20 plus years trading experience, access to client order flow for 15 years, viewed and studies millions of trading accounts. People, that's just me. We have 7 other full-time traders here at TheoTrade. TheoTrade is not a Don Kaufman show. We have 7 other former market makers, okay, hedge fund managers, individuals from both Thinkorswim and TD Ameritrade. Okay, I ran education for 15 years at a firm with the largest order flow. We have seen what works and what does not. That's where this criteria and its origins come from. Criteria is your recipe for success. The following strategy and corresponding criteria, it does require the utmost attention to detail. When you find the criteria, okay, and you're going through it, you spend time on that detail because we spent years fine-tuning the trade setup, the criteria. And when you approach the section on criteria, you simply follow the steps to be able to build a trade. We built a full 5-hour course on Ultima income generation. I am the trade instructor. As I said, it's a 5-hour course. It's archived immediately. Before anybody tunes out, listen, we have an incredible incentive for those of you interested to enroll for Ultima Premium selling. Before I even throw any details of the class up here, okay, I think it's critical for everybody to understand what we do here at TheoTrade, okay, is an incredible departure from other education firms that have ever been available. We do not just sell a class for $500 and walk away, okay? I'm going to tell you this right up front because I think it's one of the most important things before even really describing the class, okay? You get a class that has highly detailed checklists, but what we do not do here, we don't go out and sell a class for $500, okay? And then we have an indicator that's for sale for $500. And then before you know it, you have to take a class to learn how to use the indicator for the original class. But then all of this is obsolete and you have to take another class, okay? What we do here at TheoTrade, all right, differentiates itself. Number one, you can take this class. We will give you also beginners. We'll get you ramped up before taking the class. In addition to it, how about we give you trade alerts? We give you videos describing each and every aspect of what I am doing in these particular trades on a weekly basis. You can understand the concept, but wouldn't it be easier to initially follow our portfolios? And you have a variety of different portfolios that all surround premium selling. So I want you guys to know right off the bat, yeah, it's a class, but the class comes with every degree of support that you're going to need, okay, to get not only started, but degrees of success right off the bat, okay? That is what TheoTrade does. By the way, I also want you guys to know before I even show you, and again, there's an incentive to enroll today. Imagine that, okay? We don't even charge $500 for this. What we do here at TheoTrade, though, is all encompassing. We will give you everything you need to succeed in this business. You can also, after watching the 5-hour course, email us, bounce ideas off of us, trade-related ideas. Nobody does that stuff, okay? We have 6,000 clientele here at TheoTrade. They know they can send us an email. We will actually not only get back to you, right? You can send us an email and say, hey, is this trade accurate? Okay, we're not that firm that hides behind, can't do this. Okay, I mean, today, who are you going to call? You're going to pick up the phone and dial a TD Ameritrade? Take you 3 hours on hold just to get through to anybody. They won't tell you anything. We are here to support you in every step and every nuance of your learning curve. Okay, then more importantly and more appropriately, we're here to help you in the execution of the live strategy in your brokerage account, not paper trading. You don't have to, I paper traded, my sister's brother's dog's, fiance did this trade. Just come right out and tell me, what's the trade? Again, I spent 15 years in the brokerage side of the business, was a market maker prior to that. We know this business. Listen, the Ultima course, then I'll describe a little bit about TheoTrade, but the Ultima course, it's a 5-hour course. It's archived. When I say it's archived, it's already ready to go. Why do we do that? Because we like to actually record it, clean it up, it's ready to go. That can be streamed 24/7. It can also be streamed directly onto any mobile device. Okay, and when I say mobile device, realistically, you should probably watch it on some type of a tablet. Okay, if you do have a tablet, fantastic. We have, okay, TheoTrade Mobile for iOS and for Android, so you can definitely stream, okay, anything you want. Next, okay, you can download that onto your mobile device. You could watch it anytime offline. You can even speed it up as you're watching it. The class slide deck that includes all of the criteria, the checklist, okay, is available immediately for download. All right, let me give you the curriculum, and then I'm going to describe a little bit about TheoTrade. So the curriculum here, what you're actually going to learn in the Ultimate Income Generator course, how to build a portfolio of high probability trades. Okay, it's all designed for consistency, monthly returns regardless of the starting capital, detailed entry and exit criteria. That is the checklist. Okay, while keeping risk at a minimum. Discover option Greeks and learn how to manage all your positions through one easy number. Then we actually teach you what a risk array is. Hands down, my favorite portion of the Ultima class. The first time you see a risk array, okay, you're going to light up. That's for people, I don't care if you've been in this business for 20 years. Most people have no idea what a risk array is and what it can really do for you. The entire professional community relies on a risk array every single day to manage risk. Most retail traders have no idea. You're going to be able to visualize what you're going to make and what you're going to lose before you ever, okay, make a move into the market. Then you're going to learn how to properly allocate in a way that reduces risk and allows you to minimize any risk in your portfolio. Okay, you're going to discover risk mitigation techniques designed to hedge the most extreme stuff, VIX volatility spreads, risk to a spreads. Okay, you have to be prepared for an environment, okay, that most are not prepared to actually accept. You got to have your guard up at all times. That's what the hedges are designed for. You're going to learn how to sell premium also in small accounts. There's a specific, okay, 90-minute portion in this course designed exclusively for smaller accounts, retirement accounts, okay, with innovative new products that will allow, okay, the sale of premium in smaller accounts. And those products, they're new. They've not really been available before. In addition to all of this, and before I even show you everything in TheoTrade, it's completely money back guarantee. It's a riskless trade. TheoTrade is a riskless trade, okay, for 90 days. Listen, go through all the course materials that you need to anytime in the next 90 days, okay? If you're not like thrilled with it, just shoot us an email, support@theotrade.com, receive a full refund. Everybody asks about what are the stipulations. There are no stipulations. We don't make you do trades. We don't make you do a little dance, make a little love, get down tonight. We don't make you send us an email with a sob story. Listen, this is no excuses, no questions, no commentary needed. Okay, just email us. Like, listen, this is not a huge amount of capital, and I want everybody to know that. Okay, that what we do here at TheoTrade could not be more straightforward. And I will constantly make this statement. I'm actually even going to bring this up here. We want people here at TheoTrade, okay, that want to be here. All right. And I say we want people here at TheoTrade that want to be here. If you go to theotrade.com/SKU, it's S as in Sam, K as in kick, E as in echo, W. Theotrade.com/SKU. If you follow me, okay, directly to that, that would actually bring you to this particular site. Okay, we have support helping you, but you know what? Okay, support, if you need them, definitely chat with them. If you click add to cart, and I'm already showing you the discount is $297, it has a money back guarantee. The money back guarantee is for the first 30 individuals. Okay, I'll explain it again in a moment. Okay, it's the first 30 individuals that enroll today. Okay, get a completely 90-day money back guarantee. You can review as much of these course materials as you would like. Obviously, you could download the material. There's nothing we can do to stop that. Okay, we are a completely open book in every way, shape, or form. You get to see all of our portfolios, all of our classes. I'm going to describe to you a little bit about what TheoTrade offers beyond just the Ultimate Income Generator. Click add to cart. Enrolling for this, I want to show you something I think that's important in the enrollment. Okay, first name, last name, obviously. Put your phone number in there. Putting your phone number, into the enrollment form automatically enrolls you for our text messages. We're not going to bombard you with a ton of text messages. We are very deliberate about what we send out and when we send it out. At the busiest week, we'd have maybe 5 or 6 text messages that would come out. At the busiest week, 5 or 6 text messages. Again, we're very deliberate about that. By the way, you can do $300, 2 payments, 3 payments. We don't care. I just figured I'd throw that out to you. But again, the first 30 people to sign up, it's a completely riskless deal for you. Now it's theotrade.com/SKU. Now let me show you everything in addition to the Ultima class that you get. Like the Ultima class is worth the $300. There's just no question. There's nothing out there that not only do you get the Ultima class, but for the next 3 months, we're going to actually shoot you out, text messages. You get to see all of our trades, everything. Let me also show you what else you get. Everybody looks like, oh, where's the bonus? Okay. We go beyond a class or one individual indicator. Like we get that people want everything to be able to trade, everything to be able to invest. They want it at one place and one price. You got to realize, like, I spent 15 years in that brokerage world. And the 15 years in the brokerage world, I got to see all the other education companies out there. If you name any educator in this business, okay, I either know them or have known them, or okay, a couple of them have probably passed on. There's a few that have been around. Somebody was actually mentioning somebody. I know all of them. And I saw that most of their business models were like, let's sell courses and sell courses and sell courses. It's not what we do here at TheoTrade. Okay. We hire traders. Okay. Most have professional trading backgrounds. All right. We even have one that's a finance professor at Loyola in Chicago. It's Jeff Bierman. Jeff Bierman also came from TD Ameritrade and Thinkorswim. He built most of the charting package over at Thinkorswim. Okay. All of our instructors are traders first. They have to have a minimum of 15 years of experience, right? These people, that's what they do. I don't do a lot of song and dance. That's it. Okay. But you're going to get a phenomenal education here. And bar none, you could go out and you could spend $30,000 on a market education, and it will pale in comparison to what you'll get here at TheoTrade. And I'll tell you right now, it's $300. And we do that because we want to make this attainable to everybody. Okay. Our business model is a very simple one. We have over 6,000 clients. Most of those clients use a handful of brokerage firms. We do have relationships with the brokerage firms, marketing relationships with the brokerage firms. It's good. It's good for us. It's fantastic for you. Okay. Let me explain exactly what we do here for one price. Bonus number 1, we give you a quick start beginner's guide. This is everything you're going to need to know to get ramped up. If you're kind of curious what it looks like, here. Okay. This is TheoTrade. By the way, this is the TheoTrade site. Up top here, this is actually us broadcasting to you. Okay. This is the quick start guide. Options 101, options 201, options 301. This is how you are going to get started. If you know nothing about this business at all, you start with 101. But I'll also make the argument that even if you know the business, order execution part 1, 2, and 3, it's worth $300 right there. Option Greeks. Okay. What products to watch and why? I'm telling you, you're going to love what we do here. Okay. So that's the first bonus, quick start guide. Second bonus, access to every course that we've done since we launched TheoTrade in 2016. Let's say that again. You get access to every single course that we've done since we launched TheoTrade. What do the courses look like? Option courses, option newbie, technical analysis, day trading. We're not a one-trick pony. Me, I'm an option geek. Okay. But if you want to day trade, yeah, we have that too. Okay. If you want technical analysis, let me just show you what technical analysis looks like. When you enroll today, you get access to all of this. Okay. World's 50 most profitable price patterns. Okay. CT2, trading system, market profiles, synchronized trading, just all of this you get access to. Fibonacci's, Ichimoku. Okay. I mean, I could scroll here for 10 minutes to all the different classes. You're an option geek. Well, I'm your option geek here. Okay. This is Ultima right here. Want to see what the class looks like when I actually click on the class. So when you click on the class itself, okay, populates, starts to play. Okay. Click down to download the slide deck. It is all here for you. Right. And again, broken in here. Wow, I'm scared. Hold me. All right. I love this one. Looks like a bomb over here. Anyway, All of that is available, okay, today, now. Like you get part of this, it's all $300. By the way, that's not an introductory price. I'm gonna make that clear right now. You pay $300, we're not a membership. It's $300 for 3 months, period. Okay. Here's some of the classes that you get. And by the way, yeah, all the classes: guide to small account growth, in-out spreads, ultimate income, volatility back spreads, growing a small account, how to collect income being short, pairs trading, covered calls, day trading. Okay. High probability spreads. It's all here. Bonus number 3, 3 months access to TheoStream. What's TheoStream? We trade live every single day. Okay. When I say live every single day, allow me for just a moment. I said, this is TheoTrade. Watch, I'll hit refresh. Okay. When I go into TheoTrade and refresh, it's live right now. This is actually Tony Rago. Tony Rago is a NASDAQ futures trader. Okay. Okay. NQ futures rock and roll. I love this. All right. So he's actually just starting his broadcast right now. Okay. So he's walking you through, again, all the different setups. We trade all throughout the course of the day. Maybe you can't do that all day. Maybe you just want to sell premium and manage risk. I'm down with that. But you have access to all of this. As I said, there's a reason we have 6,000 clients, because $300 for 3 months, we get it done. By the way, so you get access to the chat room. The chat room is us streaming live, but you also get to talk to all the other 6,000 clients. We do text and push notifications. We do 5 different trading portfolios. We have daily coaching sessions, of which, part of that coaching session is taught by, again, Jeff Bierman, is a professor of finance, right? And in that $300 realm, we still answer all of your emails. Every one of our instructors answers emails. So you can actually, again, direct trade related questions to us, right? That's all part of it. Here's the TheoTrade instructors: Jeff Bierman, again, a professor of finance; Matt Williamson, market neutral premium selling; Corey Rosenblum's a CMT, senior strategist, a resident swing trader; Brandon Chapman's a CMT. Brandon comes from TD Ameritrade Thinkorswim. Jeff Bierman comes from TD Ameritrade Thinkorswim. Steve Slim Miller, I've known Slim since I'm a kid, 43-year veteran, stock options and futures trader, also does our in-house psychology courses. Tony Rago, just saw a moment ago, live right now on TheoTrade, NASDAQ futures. Last but definitely not least, Blake Young, market profile, futures, currency trader. Blake also comes from Thinkorswim, TD Ameritrade. This is our entire crew here at TheoTrade. You also get access to 59 proprietary indicators and scans. Every study that we use, we don't sell the studies. When I say we don't sell studies, okay, people go to these charts and they go, what's this Quantix, man? What's that about? Pretty cool. What's auto expected move? Does it matter? We give them you all. We give every one of them to you. What I use every day, you get day one. Okay. Whatever technical indicators that our traders use, you have access to. IV rank, unusual put options. Bonus number 4, Theo Theta Live portfolio. Now, this is important. This goes with Ultima trades. Okay. This is the positive premium selling portfolio. You get to watch everything that we do, and you get to watch it in real time. No holds barred trading approach. Every position I put on, I take off, hedging, you get to see it all. Okay. And I will actually update you with a video. In addition, we have a Theo Theta small portfolio. This is accounts, $2,000 up. But if you have a smaller portfolio, we have 2 separate premium selling portfolios, what I call the big boy portfolio and the small portfolio. Okay. Don't let that, persuade you. The small portfolio is still from some pretty sizable accounts. Great way to get your feet wet. This is what the portfolio would look like. Literally, I just post in a spreadsheet, trade, 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 trade. Okay. There's not a ton of them, but there's enough to which you can generate some really solid amounts of premium. Everything that I put on, I take it off, you get to see it all. Okay. In addition to that, we do a weekly video. The video is approximately 12 minutes. It comes on a Friday, and it'll update you for everything that I've done, okay, in the entire week. It's only 12 minutes. It's all it takes. So you don't have to sit there and watch every single move. Technically, you could just figure it out all at the end of the week. Most of the positions are really hands-off too, so you could probably just catch up. Then we give you bonus number 5, technical analysis toolkit, Tech 101, Tech 201, MACD indicators, timing based. There's 21 other, okay, technical analysis classes. Bonus 6, day trading treasure chest. Okay. That's where you learn to trade NASDAQ futures. This is for people that want to sit in front of the computer. You got to realize here at TheoTrade, We have something, again, for everybody. It's every genre of trade. And again, it's $300 a month, or sorry, $300 for 3 months. I apologize. It's $300, okay, for the 3 months. That's it. It's all we, for 3 months. And again, after 3 months, you go, what do I do? Pay another $300, okay? Bonus number 7, mindset mastery. Here's another class that I urge you, write that down. The 5 essential building blocks to successful trading. Okay, it's Slim Miller's class, not my class. That class, easily worth $1,000. It's going to change the whole way you think about the market, how you approach the market. I don't care if you're experienced, inexperienced. That man, Slim Miller, has forgotten more about risk management than you or I will ever know. In the 1980s, and I met Slim. He was like a family friend, but I met Slim when I was a kid. In the 1980s, okay, in the 80s, he was making or losing 7 figures a day on the trading floor. Okay. Unbelievable amounts of risk that he used to take. He's the one who actually teaches our psychology class. It's the 5 essential building blocks to successful trading. Okay. I implore you, you got to watch that class. Okay. I'm serious. That's easily worth $1,000. All right. Next on here, bonus number 8, it's a quick start guide to Ultima trades. It's getting started with Ultima trades. Now that's the premium selling that I do. And what we did is you open up a new piece of technology. Okay. You open up a new piece of tech, you open it up and you're like, oh, how do I use it? There's usually a quick start guide. We thought it was a great idea to actually do that. So we built a quick PDF guide, quick start guide to how to get premium sold quick. Here's from Jeremiah and what our members are saying. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders set right after getting into the trade. This paid for your class in less than a week. I'm very thankful. I subscribe to your services. Keep up the good work. Thanks, Jeremiah. We include everything you're going to need to trade to invest: classes, coaching, email access to the instructors, live trading room, indicator scans, mobile access, everything you're going to need to succeed. We've literally built like the Netflix for traders. It's $297 for 3 months. I also want to detail on here before I go any further. When I say it's $297 for 3 months, okay, this is not a membership. It's for 3 months. After 3 months, if you want to do it again, it's another $300. Want to do it again after that, it's $300. Okay. Again, we're pretty much like no holds barred. And at any point in the next 3 months, okay, if it's not for you, just get your money back. So we give you access to 100 classes, new monthly classes, text push notifications, the scans, okay, it's all here, and you can email us. I mean, even if you emailed us one time in the next 3 months, and I was able to save your proverbial bacon one time, it's going to save you more than $300. If you go right now, it's theotrade.com/SKU. Again, theotrade.com/SKU. In fact, I'm even going to pull this one up over here. It's theotrade.com/S as in Sam, K as in Kick, E as in Echo, W, theotrade, okay, .com/SKU. And if you follow me over to that page, and I'll make sure that everybody is comfortable with this, all you have to do is click add to cart. There are 30 riskless spots. In fact, I'm going to reiterate that. What I just displayed for $300 for 3 months, it's a 90-day money back guarantee. Like the way we look at it, listen, it's only $300 anyway. Okay. If you don't like it, we don't want you to be upset over $300. Okay. If you don't like it, we would rather you part ways with us on really good terms. The ironic thing here, life comes up, crap happens. All of a sudden during the next 90 days, you can't necessarily do it. Something happens. Again, life happens. You got to go to work, this, that. We get it. You don't even have to tell us why. Just email us, support@theotrade.com. Like, we get it. Money back guarantee stipulations, there are none. Okay. No excuses, no questions. And if you get a refund, you get to keep bonus number 1 on us. Bonus number 1 is that kind of option introductory, but it's like 20 courses in there. We just give you that. That's just part of it. Get into TheoTrade now. Okay. We're going to work with you directly. We do incentivize you to enroll right now. How do we incentivize you? There are 30 riskless spots available, effectively meaning the first 30 people to enroll, okay, get in for completely riskless. And we do that, and we try to do that because we give you unlimited email mentoring, which means 200 people sign up. We deal with an extra, X number of emails per day. So we incentivize you. There are 30 riskless spots available today here at TheoTrade. Send us your trades. There's unlimited email mentoring. And when I say send us your trades, okay, I cannot stress to you enough. Like, I'm serious. You're new to this. Like, bounce a trade idea. Okay. You'd be surprised. People always like say to me, they're like, hey, Don, you actually responded to me. What else do I do? I never leave home. I'm living in the mountains right now for the last like 3 months. Okay. We have a house up in Payson, Arizona. There's nowhere to go. There's a Walmart up here. Okay, people, a Walmart. I have 3 kids that are homeschooled. It's safer in my office right now. I go down there. Okay. Wife is putting me to work, bad work, horrible work. This answering your emails, it's pretty much the livelihood. By the way, I'm going to answer some of your questions right now. Okay. My wife is listening. I mean, dead man walking right now. Dead man walking. Oh, so those of you that know, the first 30 people to enroll, I'll just read off the first name and the last initial, and where you guys are from, so you know that you're enrolled for this. But let me throw this up here really quick. And there's a bunch of names that have already come up. The 30 spots are filling up right now. Thomas H. from Florida, Paul M. from Nevada, Bill W. from Tennessee, Jason K. from Arizona, David P. from Colorado, Mark M. from Wisconsin, Joe M. from Georgia, Larry W. from Florida, Robert H. from Connecticut, Rosna G. from Texas, Richard P. from Kentucky, James G. from Kansas, Robert S. from Montana, Nan P. from California, Daniel J. from Arizona, Barry B. from Ohio. Okay, I am going to butcher this name. Muthrakason M. from Texas. I apologize if I butchered that name. Mark E. from Colorado, David B. from Virginia, Todd H. from Alabama. So just off the cuff here, I think that's probably about 18 names. It usually takes me anywhere from about 5 to 7 minutes to see a name populate in here. So I'll read the rest of them. I'm actually going to get some of the questions answered for you. By the way, everything that you get today, Ultima, Quick Start, Beginner's Guide, over 100 classes. By the way, there's closer to 150 classes now. Access to the chat room, TheoTrade, the actual portfolio for of course Ultima trades, technical analysis toolkit, day trading treasure chest, mindset mastery. By the way, the mindset mastery, I put a lot of weight into that one too. I'm not a big psychology guy, but Steve Miller like literally changed the way I look at the marketplace. And the quick start guide to Ultima. Okay, it's theotrade.com/SKU. Oh, if you follow me to the link, you can also grab the expected move indicator. Those of you, if you're enrolling, okay, you need not do this because it's on the site. The auto expected move indicator, though, for Thinkorswim is found towards the bottom of this page. Again, this page being theotrade.com/SKU. Thought that was a cute way. SKU is it's prevalent, it's everywhere. Anyway, let me answer some of the specific questions, okay? And then we'll move onward and upward from here. Oh, what our members are saying, I wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel each week my knowledge of options trading is growing steadily, rapidly. Obviously can't speak for my classmates, but it's going very well for me. Thanks again for the great instruction, okay? I also threw this email in here from Todd Summerall. The reason I threw this in here is just to display to you the types of emails that we answer are, again, a kind of a vast departure. Like, I do not mind answering very direct, and again, I've got all your questions popping up in here. I do not mind answering very direct trade related questions. I carried almost every brokerage license for 15 years. I did my Series 3, my Series 4. By the way, Series 3 is an options. Series 3 is your futures. Series 4 is an options principal. Series 7 is a registered rep, which is a just any general brokerage license. I had a Series 24, which is a principal broker dealer. I had my Series 66 because I was a registered investment advisor. A 66 is a 65 with a 63 combined. You want fries with that? But there was a point in time where at Thinkorswim, we had managed $400 million as registered investment advisors, and I headed off most of that. So we're really comfortable answering direct related questions. It's one of the reasons I actually hire a lot of the individuals from the brokerage side of the business. But Todd Summerall said, don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. What that basically means, This guy was in a huge position. Okay. And I told him, smash it or you're dead, meaning that get out of the position. And I literally emailed him. I said, smash the delta or it's over for you. And said, you know, you saved my account. Just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without the help. So I like to just bring that up because it's a very specific case. By the way, a couple more names just popped up here. Jerry J from Illinois, Michael D from Pennsylvania, Francis C from Pennsylvania. All right, general questions. I'm going to go through them real quick, then I'm going to answer some very specific questions. Call it a day because I know I'm way over in time right now. Always adding slides to this presentation because I like the premium sale right now. All right, let me begin over here. Oh, people always ask me, what do I need to get started? Nothing really. You need a laptop and internet connection. Frankly, I don't even think you need that. I think you can actually use an iPad for everything or any type of Android tablet. Okay, you know what? I've got every piece of technology, and I always tell people, you do not have to buy an expensive iPad. Okay, I do not have the latest greatest iPad. I have the $299 Walmart iPad, and it's more than enough. I actually trade extensively on my iPad, any tablet. Actually trade extensively on my phone, and I'm not anti-Android at all. I just happen to have a bunch of kids, and the iPads are pretty good for kids as well because they're only $299 and they break them. So we have everything you're going to need to get started, everything you're going to need from novice to extreme trader. The second point on here, we don't do membership anymore. Like if you've ever joined a gym membership, you'll understand why. And this is exactly my reasoning. I have joined a gym and never been able to get out of the gym contract. I am not joking. This morning, I've been away from the gym here in Arizona, okay, for a year and a half. This morning, I get an email, they charge me again, okay? Like they will not die. Okay, we don't do memberships. We'll never charge you or bill you again. We do what's called a positive consent, okay? If you want to continue with Theo Trade after 3 months, okay, do you want to continue? Yes. Okay, then we're getting somewhere. We don't auto renew though. Number 3, we're now providing weekly video updates. The weekly video updates are to follow the moves that we make in a variety of different portfolios. Number 4, we archive everything. Every word spoken on Theo Trade since 2016, and we launched January of 2016, every word is completely archived. Just to give you an idea, so there's 6,000 clients and they're all streaming data, okay? This last year, we used 1.2 petabytes, okay, of streaming data. 1.2 petabytes. If you're a tech geek, you'll understand that is a phenomenal amount of data. There are millions of minutes being streamed every day now at Theo Trade. It's phenomenal because like we started off, we're like, I don't know if anybody's ever going to watch this. We're getting millions of minutes in a day. All right. So we archive everything because we understand that you can't always watch live. The really cool thing though is now in the archives, you can actually watch archives off of your mobile device or tablet. What's really neat is you can download it onto your tablet and then speed it up. You can watch it at like 1.4 times the speed. I sound like a chipmunk, but it's awesome. Number 5, we actually give you Theo Trade Mobile. Okay, we have our own mobile application. It'll work really on any tablet, phone device. Okay, add your cell phone number. Number 6, add your cell phone number when enrolling because it automatically enrolls you for text messages. If you didn't, you can always send us an email and we'll give you directions how to do it. Okay. Number 7, you can email us anytime and receive a response within 24 hours. One little thing I like to mention about the email, when you email us, please understand something. Do not email me on Friday with 5 minutes to go to the closing bell and be like, I need help. We actively trade. So I like to answer emails before market opens, after market closes. I answer some during the day too, but most of the time I'm usually answering emails. Like I wake up super early, answer emails then, I answer emails after the market closes. Okay, I'll sit around at night, watch TV, answer some emails. That's just how it runs. So most of the emails okay, are going to be answered within 2 hours, okay? But really specific trade related ones, just please, okay, don't freak out and panic on us. We will get back to you, but give us a little bit of time, not expiration day with 5 minutes to go to the close. Number 8, you gain access to every course, everything we've done in the previous 5 years, now 6 years, including classes, coaching, any archives. Everything is searchable with a whole search engine in there. Number 9, variations of the trades we showed could be done in an IRA, okay, or a retirement account with as little as $2,000. To sell premium, it's typically $5,000 in an IRA. Number 10, Theo Trade. We can help you get approved at several major brokers. We have great relationships with brokerage firms. Okay. I now have friends that, number one, probably the closest to me is TD Ameritrade. Right. One of my close friends is the right-hand person to the CEO now of Charles Schwab. E-Trade. We have friends that actually run E-Trade. I've actually got a friend now that runs Robinhood. He's actually the number 2 individual even at Robinhood. We've never had a relationship with them in the past. So we're kind of expanding all of our horizons right now. Listen, there's 30 riskless trade spots available, of which there's only a handful left. A couple more names. Okay. Dyke R from Florida, Brett D from Missouri, George E from Pennsylvania, Alan W from California, Miroslav from New York. So apologize again if I'm butchering your names. I'm terrible at, especially I've got small font on here. All right, theotrade.com/SKU. Now I'm going to answer some of your specific related questions in here. Let me just pop this back up here, make sure there's nothing too crazy on here. Again, theotrade.com/SKU. And these specific questions, as I was saying in here, whoops, okay, the specific questions that are coming up, and I'm going to try to address each and every one of them. Okay, first and foremost, if I sell an iron condor 60 days out, would a VIX volatility spread, okay, be the same 60 days out? And the answer is absolutely unequivocally not. Okay, first of all, today's marketplace, a little bit different. There's not really good edge in an iron condor presently. So if you are going to use iron condors, and I'm being very serious about this, like I want people to learn how to do this and learn how to do this the right way. We, even here at Theo Trade, we've done classes in iron condors. The iron condor has no present edge. And the reason that there's no edge to it, there's too much implied volatility skew. Skew, okay, is a measurement of out of the money puts to out of the money calls. Okay. The skew has been incredibly heavy. The skew has come down since some of the volatility has picked up, but it's still like the iron condor does not have great expected returns when you start looking at a bigger subset. Anyway, no, the VIX trade will not work 60 days out. VIX, like the VIX, if the market crashes, the VIX trade 60 days out won't work. Oh, I like this. The margin, okay, to sell options is expensive, needs a lot of capital. No, it doesn't. Okay. No, it doesn't. So the reality about margin is there are new products that very few people are aware of that actually give you the same of what is termed portfolio margin without having to have a big account. You can have a $2,000 account. And I stress to you, I'm actually going to show you my margin requirement here. This is not a small position. Like, look at my MES position here. It's a 1 lot, it's a 1 lot, it's a 5 lot, a 4 lot, a 3 lot, and a 1 lot. The margin of this is $9,000, okay, $500. You go, I don't even have that. That's in an IRA. That's actually in my retirement account. Okay, and you go, oh, it's half that in a regular margin account. So this is less than $5,000 of margin. Don't ever tell me that you're going to have a lot of margin tied up. Okay. Oh yeah, it includes this 1 lot as well. Now the spider position ties up a lot. This is a big position in the spiders. Okay. But I stress to you again, margin is not going to be an issue. Oh, I like what somebody said. Isn't this what Karen the super trader did? I know Karen the super trader. How do you think she learned to sell premium? Problem with Karen the super trader, she didn't mitigate exposure. They just sold options naked. Okay. And they used futures contracts to kind of hedge the move. So in the first extraordinary and violent move, she got crushed. Okay. We are using VIX volatility spreads. We are actually using risk twist spreads. I will tell you again, this is not premium selling naked. This is actually Ultima. It is selling premium with risk mitigation tactics. It is all set up. It's preeminent risk mitigation tactics. It's preemptive, I should say, on that front, where I am trying to get ahead of the eventuality. And what's the eventuality? Listen, sooner or later, we're going to crack. And when we do crack substantially lower, not only do we want to have risk mitigation in place, but think about like if this marketplace really tanked, let's say over the next 2 to 3 weeks when it really tanked, don't you want to be the person after it tanked that stepped in and just goes sold, sold, sold? That's really when you want to sell premium, when the volatility is raging. Okay. They always say, the time to get involved is when there's blood on the streets. Nobody remembers the additional portion of that phrase, and even if it's your own. All right. Well, I like that. How do I hedge my portfolio with so much growth stocks in it? Okay. All right. Yeah. You know what? To hedge is a completely different concept than what I'm really focusing on today. In the archives of Theo, we actually offer specific hedging related classes. One in particular that you might want to watch is called the Atomic Hedge. So you just look for it. And if you don't remember, it's called the Atomic Hedge. If you can't find it, just email us. We'll get it right to you. Okay. We have Brian Aponte. He knows where all the archives are. It's awesome. I like what somebody said. Where should I start? The Start Here menu. Where should you start? We actually legitimately have something that says Start Here. Okay. We were talking about this, like, what should we call it? What should we call it? I don't know. Start Here. So it's next to Member Home, just Start Here. Like you click on Start Here, options 101, options 201. I thought that was kind of an amusing question because that one did it for me. All right. I like it. By the way, Robert M from Virginia, Robert D from Rhode Island, just a couple more names I'm reading off over here. Michael was asking, can provide a formal definition of exactly what skew is when trading options. Yeah, no, skew is it's the differential in the implied volatility of out of the money puts versus out of the money calls. So if you will, okay, options are priced at X amount, doesn't really matter, but implied volatility really kind of tells us, okay, where the option kind of is and how volatile the marketplace happens to be. So the out of the money puts right now are trading for an incredible premium versus the out of the money calls. And it's literally the distortion in there. Know a little bit about that, know a little bit about the fact that the skew is even better further out in time. And you start to understand a bit more about Ultima. Okay. I like it. I tried to catch each and every one of these. Oh, the last one is, I'm new to options. How can I get caught up to speed? So you know what you're talking about. Sounds like a foreign language. In that last, question that popped up in here. Listen, this couldn't be easier in terms of there's a couple of aspects, a lot of questions that have popped in here. There's a couple of aspects, a few terms and definitions, all of which will be covered in the options 101, options 201. There is vocabulary, but it's only really like 15, maybe 17 terms and definitions. Sometimes I use the term like SPOOs. People don't even know what that means. It means S&P futures. Okay. Sometimes I'll use terms like, VIX vol spreads. You go, I don't even know what that is. The irony is today you'll feel lost. A few months from now, you'll be asking me questions like, hey, how many VIX vol spreads do I need against my SPOOs? And you'd be like, what? Okay. 3 months ago, you didn't know what we were talking about. Got to sit down, got to listen to a couple of archives. Okay. It'll sink in. Believe me, this is not going to be like Rosetta Stone out there. Okay. Let me get this one last question. Okay. What is the best ways to hedge down risk in SPX? SPX specifically, yeah, I can help that a little bit. I can help that. That's going to have to be a detailed answer, or Q&A to me. You'll have to email me about the SPX, and I'll tell you exactly why. I don't know what kind of risk you have on in the SPX. Okay, are you in a put spread? Have you sold naked puts? Whatever your risk is in the SPX, I've got a couple of different variables that I'll look at. How far out in time it is. Is there negative gamma risk, meaning it's short duration or longer duration. And I'll be able to walk you through a couple of ideas to hedge. So on that last question, I hate to do that to you, but I need to know, or specifically, and by the way, cut and paste the position. I don't care. Cut and paste the position right out of the platform and shoot it over to me in an email, because that picture over there, I'll know exactly what we're looking at. Anyway, I want to thank everybody for joining me today. Again, my name is Don Kaufman. It's theotrade.com/skew. Thanks everybody for joining us for Ultima. I'll be on once again, first thing tomorrow morning. I do the first hour every day live in the chat room. Fantastic. Thanks everybody for joining me. Have a good afternoon. Bye-bye.